midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every trade home never dies. On the edge as the numbers fly. Checking the charts, and tracking the charts. Midnight glory. Sanctuary in all its blending. Mind on fire, never ending. Dreams of gold, relentless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
What's up, you guys? Howdy, howdy. What's up, y'all? Today we are getting set for giveaway. One step, 350K, one step. Ooh. What's up, friends? Good morning. Free glasses. I wish they were free. Morning, Patty, Tim, Victor, Julian, GTR, Morris, Dean, Victor, again. Can see a rally today. More favorite be another inside day than Monday decides. Another inside day today, I think. PPI came much cooler than expected. I think I have a bullish morning. Opening below MHPs in the overnight. It doesn't look so good. We have to actually fight over a hurdle to get up. We need another news event or catalyst, I think, today. Otherwise, it's inside day. But we'll see. Hopefully so. I'd like to see it. I mean, I'm one of the big proponents of bottom is in, so we'll see. What's up, Julian, William, Michael, the GOAT. Thank you. Ian, Dominic, Disco, Jason, Eric, Goober, your boy Brian. What's up, Brian? Visualizer, Ian. Look at Sharpster. Thank you. Got a haircut the other day. I feel lighter, like 5 pounds lighter. Will liquidity maps work at the open? We hope so. It's not. It's the data providers are so congested in the morning from all the chaos, and in chaotic environments, this happens with a lot of platforms. Unfortunately, there's nothing we can do about it. We send for our data, and they come back like 5 minutes later. It's weird. Lots of selling last night. Good morning. More tariffs overnight for China. Yep. All right, y'all. Welcome to the stream. So I think we know a couple things, right? Number one, don't ever fight the Fed. Number two, don't ever fight Trump. If Trump wants there to be a bull market, there will be a bull market. He will say things to make it a bull market. Now, right now, we're not in a global tariff war. For the most part, everything's paused for 90 days. Doesn't mean anything other than he's trying to press the market to give it some direction and power play China to, get them to do what he wants. This is all a ruse against China, apparently. Pressing tariffs on everybody so that everybody calls and goes, wait, hold on. Let's talk. And he goes, yeah, so, do your business with us instead of China on these things, and we only do tariffs with you. Okay, fine. We're in. You guys buy more stuff from us than China does anyways, whatever. We'll take it. We don't want to start a problem. So everybody kind of buckled, right? Almost everybody did. And China was like, retaliating. And so we doubled down on China, right? And so now it brings so double down against each other. It's like a bubble ready to pop. There's no way it's going to last, right? And pressing on each other so hard. We've been through the same song and dance with China. He wants them to do something. They'll agree to something. And then the next week or two, whenever they agree to something, and those tariffs are off the table, we have another 10% and 10% and 10% kind of thing. So right now the goal is that the market is still picking that downward direction. It's not crashing anymore. So say yesterday's like 5%, 6% sell-off had everything to do retracing a 10% move to get back on track. We can't have like a chaotic market. So yesterday was technical retrace, needed to happen. We opened today, still with that kind of bearish setup. But any news can pop the market higher. The correct trade for my belief is what I always do in times like this. Aim for the month or two you think it's going to turn around. And I pick options trades that are long-term out. And then if the good news comes between now and then, I make the money. So it's like a gamble on news. And I'm prepped and ready to go every single day. We fall another 3 to 5%. I'm going to throw in money. I already started buying the dip for the bigger run. And again, it's technically not set up to move faster yet. But you see how quickly, tariff pause moved the market. I mean, I know how to trade. That's the difference. I know what causes markets to move, and I'm ready to go. EU and China getting friendlier. Yeah, so it's like, that's also happening. So we'll see. I feel at the end of the day, they're going to shake hands. Trump, the president of China, they were like buddy after all, even after all the trade war stuff. So something's going to happen that's beneficial to the United States, or else whatever. What's the worst that can happen? Trade war with China, been there, done that. We already had the same threats. Market didn't go into recession off of that. It won't. We should be fine. Anyways, guys, those of you chilling still, check out what our prop firm partners are offering. You guys maybe kind of reset your accounts or start over, jump in prop firms for the first time. Doesn't matter. You can use our code, Rocket Scooter, get you 30% off. Tradeify, one of the fan favorites here. Take profit, one of the fans' favorites here. We do My Funded Futures, Top One, the brand new trading firm on the block. We have Rocket Scooter works there as well. Apex, you're doing like 80% off now, and ETF as well. And we're going to do ETF giveaway today. 3 accounts to give away with ETF. ETF Friday, we love it. But we'll see, right? US is in a weird spot. I've traded through several market crashes to know what causes markets to crash. And I was in the boat of tariffs don't crash markets. This was just like the silliest thing ever. But Wall Street needs a reason to panic, because we haven't had a good panic reason in a while. We really haven't. So tariffs can create downtrend in markets, but tariffs 7%, 13% circuit breakers, all the gurus out there pressing on them scare tactics. I had to educate people on it just so they didn't freak out. So, anywho, get that giveaway going. We get the smash like button, guys. Bow. Bow, bow. Yeah, Top One, the new one. The new kid on the block. Let's see. I need to put that in our Discord. Top One features. Am I trying that? You guys can try it. I don't have any more room in my daily arsenal to be trying new problems yet. Eventually I will. They've been open for open with features for a couple weeks. I remember seeing on social media, Brett Simba was their first confirmed payout. So it looks like they're. It's funny, Brett was the first person paid out. I don't know what we get as far as discounts goes, but you guys can tell me. Contra will change the top septic and introduce 50% consistency rules and 5K payout caps. Well, they realize that that's a better risk model, like the Tradeify model, payout caps. And in periods of high volatility, people can YOLO their way into glory. And so they got to make sure they have a battle under control there. In this environment, prop firms are going to learn the hard way, because ever since the prop explosion happened in 2020, we've had some, I guess the minor recession we had in 2022. Yeah. But we didn't have anywhere close to 6%, 7% days in the market. So this is the first time they're actually dealing with that. And they're starting to realize their risk model is flawed if they have unlimited payout caps. The Pat Weilands of the world will milk these companies dry in this environment. Even if you're just okay at trading, you could YOLO 20 accounts to massive victory with no payout. So consistency rules are kind of required in high volatile environments. If they don't have one, they're unguarded. And it's okay in an environment where it's not volatile, when markets are volatile. Somebody with enough money could drain millions of dollars from them overnight. It's controversial because they didn't have it before, but it's better than them going under and paying nobody out. Hit the like button. Hit the like button. Good morning, sir. What's up, Sahil? So, as much as it is, I'm like, why didn't they have? I wonder why they didn't have them all along. Okay, this is a marker liquidity pockets. I'm just going to move these lines out of the way here. Let's check the VIX though. It's kind of starting off here. Don't like that the VIX is picking up some momentum here. It's after today. We know today's the day we know if the market's crashing or not. Still, VIX still picking up some moves. There's a lot of illiquidity, a lot of uncertainty here. I love that song. So the VIX still really high. It collapsed a little bit after the big 10% day came out. The VIX kind of dropped down, but then it rallied back up. So it's kind of weird to kind of see the VIX drop and then come back up. Like we're back to that kind of elevated uncertainty. I don't like to see it consolidating high like this. Not my favorite. VVIX is still not the high hundreds, right? I don't know where all this uncertainty is coming from. Like everybody wants the market to be bullish, but then we don't have anybody buying the market right now. So my biggest fear today is that the market, well, not fear, like I care, like the further the market falls, the bigger I start piling in. Now, again, I've got between now and 2 months to decide on where the bottom is. It's going to bottom in the next 2 months. That's absolutely certain, at least for me, but we have an attempt because we trade into liquidity pockets, monthly maps. So we show that there is a bottom potential in from the lows. So inside of here, even if we get like a day like this, right, that catches up to that equilibrium, we'll see. And then it's like this Monday, and then Tuesdays like this, and we rally out like that. It's very possible. I've seen days like this. It looks, I know you kids call them head and shoulders and shit. There's the head, there's the shoulder, and there's a shoulder. Whatever. I don't call it that. I call it Batman. Just looks like Batman's ears. I'm Batman. Jokes aside, we'll see. Any break of MHP up here is a run up. Any break of DD band down here is another collapse out. VVIX is starting to come down, but not come down enough. So the volatility of the VIX can get crazy. Be careful on those VIX risk interval breaks. And we're going to watch that very closely today. So let's monitor where that's going to be, because this is an automatic sit-out rule that triggers. And it happened yesterday, like right when the market opened. We'd already triggered that rule. And on stream, I traded with micros just because that rule is triggered. But you guys, as we train you, we sit out no matter what, every single time. So this guy is there, and that guy is there. So VIX above 39.47, the market's plunging down again. We'll see what I do. I had a fantastic day yesterday. I think it was like, how much did I make? I made a whole lot yesterday, like a whole lot. Pretty exciting. Well, relative to my TradeFi accounts. 11K? I finished out the day with 11K. So we'll see what I get. And it doesn't matter what happens in the market, I'm going to trade a certain way. Bearish or bullish today? So far, everything's opening bearish. And I'll walk you through some of the details of this in a second. So watch 39.47 on the VIX. Here's the level. 39.47 VIX futures in the April contract. Above this is auto sit out rule. You don't trade in that elevated VIX. Let the market die. Just looking at my fingers, something to kind of find my levels here. So overnight, dynamic MHP. Wait a minute. Oh, there is that one. Let's move this. I was using this to decorate my futures chart. Make you guys a little easier. Let's move my little tools down here. Let me get all the data here. Bearish streak is opening below MHP, so that's not below MHP in futures. So we'll see what the equities come out to be today. Hopefully better, but it is opening bearish, unfortunately. We knew that in the overnight. So I made a post on my Discord. We give you, like, if you guys are coming to the boot camp in the mornings, how are you liking in the afternoons? I give you guys my analysis of the boot camp of what's going to happen overnight. Do y'all like that? We stay all the way till futures market opens. If people that stay till the end get a treat. I talk about my overnight plan. And overnight I said, well, it's a bear market. I'm taking off for the night. And then we sold off immediately. Market hit MHP and sold off again, right? Hopefully that's helpful to y'all. Like, it's like, oh man, today's not the day. 17,781. This is going to be 51, 53, 85. $53.59. Wait a minute. I don't know why it's not like saving my drawings here. There we go. 5309. Come on, man. So we're in a kind of like a short down, and I'm going to move this a little lower, even though it's not exactly there, because I want this to be able to not overlap with that green line. Yeah, we're sitting there. Get my drawing tools down here. So in this environment, right, only 88% of days will stay in between the bands, inside days, 4% above, 8% below. My first thought is the market's going to open and immediately trying to sell off. Okay. Although we had some pretty good moves in the overnight. So not that bad, not the best. And so MHP is resistance pressure. Upper DD band is resistance pressure. Two of them are lining up. So I'm not necessarily super bullish on the bigger break, but I am still looking for bottoms. So anywhere off the big sell-offs, I'm going to be taking a sell signal from. Anything off the big bottoms I'll be looking for buy signals from. So I'll be looking for liquidity pockets and things. Like yesterday, right? We sold off irrational. We finally bounced in a liquidity pocket. The problem is you just don't know which one. And this one failed. I tried on stream. This one failed. I tried on stream, and then I walked away, and then it looks like that one is the one that supported. Yesterday, I finally started loading up my options play. I'll tell you guys the top secret trade after I'm fully in it. I don't want people crowding my trade. It's kind of one of my secrets I keep to myself, but I'll let you know right inside of here is when I started buying. So I got a good entry on that, and every 3 to 5% the market falls lower, I'm going to pile in to, again, more of a position. So every 3 to 5% we fall, I'm putting in 20K, 20K, 20K kind of thing. Build up. I'm going to try to turn, hopefully, like the further it goes, the bigger my trade's going to be. So maybe I could turn 100K into like 2 million. Be kind of nice. 15x, 20x if we do get good news come through and the market turns around. Or, moderate gains if the market just rallies. So we'll see. With the tariffs on pause, I feel like that's going to create a bottom in the market. But we'll see. I could be wrong. And I do have a stop point too. All right, so we have 18,677. Let's clean this up. The lower the low, the better. Clean that up. All right. 5385. No, I'm sorry. 18,781. Let's just delete that. Delete that. Whatever. We'll just look at these today. The bigger pivot. A little bit of pre-market selling there. It's neat to see that the market is just 300 points lower since the last 15, 20 minutes. Can we get a break here? Can we get the market stabilized here? VIX is trying to make the market have a bad day. So our guess this morning on greater markets, we're going to hope that the greater market come on, pencil tool. We're going to hope that things are bullish, right? We'll see. DD ratio, I like to be greater than half, so the stocks are likely to be bullish again. I'm going to guess that SPY is going to be less than MHP like it was yesterday. We didn't break any highs, so the monthly maps are surprisingly bullish. You have 2 or 3 of these signals are bullish, so let me show you what I'm talking about. I'll tell you guys, I teach this in the boot camp, but when we rallied at 10%, and I'm gonna look at SPY first, took us into a bigger map. So let me show you. A bigger zone. Whenever you move high and you retrace and you look where we land, we close today in a liquidity pocket. Your liquidity pocket is there, there, and there. It's telling me in the next week, if we don't break 500, we're bottoming the market. That's how this works. So this is a potential bottom. Of all the months and months and months, I don't say this is the bottom, this is the bottom, this is the bottom. I finally say it. This is potentially the bottom. My confidence in this being a news-driven market is less than it is if it was just a reversal market. But we moved high enough that at least today we're in a liquidity pocket, and today's sell-off that we might get, as long as the sell-off lands right at SPY 500, we're good. Because if we support at 500, it's liquid here for the next 2 weeks, okay? And then what you start to see is after this point, our typical deterioration pattern that shows a stable bull market. The market is looking to stabilize here, which means this could be the last day or two of selling. Now, how do I know that I'm wrong? Is if we lose 500 and keep going, or the map changes this today and it's at a different spot and we're below in the bear zone. So what you want to see is the burp up and the retrace end up inside of or above a liquidity pocket. And as long as we stay here in the next 2 weeks, this was the bottom here. So that's good. SPY exhibited that pattern once. QQQ exhibited that pattern as well. And then if we fall below it, then I just undo my trade, right? I want to get in as close as I can to that bottom. So a big sell-off today will be a massive good point to enter my position. And QQQ is even cleaner. Look, I don't know about you, But this is as bullish as it gets on liquidity map. Monthly maps. You see that? It's clean. Nice and clean. QQQ has a very tight bulls liquidity pocket right here, 430 level. Maybe like 425. So it's clean. The market has thrust itself into bull territory. Market's still trying to sell off. And if we lose this area here, then my thesis has changed. Or if the map has changed to a degree, my thesis will change. But so far, we all see what I'm talking about? Liquidity pocket is the space in between the zones. Okay? Liquid markets don't crash. You can call it a crash buffer. Okay? There's where the liquidity is. So any selling off is likely to find support inside of here over the next 1, 2, 3, 4, 5 trading days, which is another week into expiration. As long as we survive in this zone into expiration, then that's a bottom, which is good. Can't hear me? Let's turn the speakers up. Okay, so I'm excited to see that this is a potential bottom. And this is the pattern you wait for. Like as the months go by and the market's selling off, I'm never like, this is the bottom. But I look for this pattern every time. And every time we have a big market crash and it happens, I'm gonna make $1 million trading it. And if I'm wrong, I lose 100K. No big deal. So basically, as long as we survive those levels, the market's found its buyers. I mean, that's what you're looking at. Let's make our software superior to everything else out there. Now, again, we can't predict that the market's going to do anything. The market can do whatever it wants, and it's news driven. But if the market survives in here, we found our buyers, right? We found where the market's liquid. Whether it's consolidating lower for longer and then crashes out, that's one thing. For the most part, anytime I see this pattern, that's my attempt at bottoming this market. That's it. Ooh, baby. Would expect inflation well over 3% this year due to the tariffs. And like, yeah, probably so. I mean, but 3%, like think about it like this, right? 3%. Like the market is so struggling for bad news that 3% inflation is like what's making people freak out, or Fed's not going to cut rates 1/4 of a point and the market freaks out. 1/4 of a point, right? We're so overly sensitive and emo right now because conditions are so good in the market. Market needs anything to flip out over. So the funny thing is that, you know, on a grander scheme of things, everything's kind of golden and not really that bad. Yeah, the tariffs can make things more expensive. That can cause a lot of inflation. But I feel like the tariff problem is going to work itself out. They're going to figure something out. And nobody wants to plunge the globe into a global recession, especially not the president with the biggest ego in the history of presidents. Is no longer, or is never, I don't even care if he's on his way out. Like say, I don't give a fuck, I'm on my way out. His legacy matters more than anything. He wants to be rich. He wants his friends to be rich. He wants you to be rich. He doesn't want the market to crash and people to make fun of him as his legacy. He wants to go out like of the office being the American hero that he sold himself as. Trump's going to make the market rally. You got to trust. And Trump we trust. We know it. He's going to make it rally. It's his biggest priority, is to make everybody prosperous, American prosperity. In no way is he going to create policies that throw us into soup kitchens and on the streets. There's no way he would let that happen. And if he did and realize he made a mistake, he doesn't do it and be like, well, I made a mistake. Maybe they'll play it off. Maybe when he made a mistake, but he'll play it off. There's no way he's going to create something and let the market burn and just be like, I'm sticking to my guns, right? He's going to do what he did, 8 years ago. Same song and dance. We traded the same song and dance. The minute it gets bad enough, he's going to go, that's okay. We'll just pause the tariffs. Like, he's playing cat and mouse with the game and with the market. Straight up. So, is it a 5-minute ES chart? No, this is just a 1-minute chart. I don't use time frames and I don't use technical analysis. I just use my levels. So I just show the 1 minute so I can dive in as deep as possible into the candles. Well, the March 2020 lows are going to get taken out for Trump's 4 years over. Nah, I don't think we ever in the history of our lives will ever breach the March 2020 lows. And the market has we've already come out of a long-term debt cycle, number one. There's no people that if you trade long enough, you'll know that the market doesn't hit the big recessions every 10 years. It's like every 100 years, 75 to 100. So after 2008, there's no global market collapse. There's just no bubbles to pop right now. AI is like the start of a bubble and it hasn't even fully begun to inflate. It's just kind of barely inflating. So we may have the smaller recessions, the short-term cycles, which come every 5 to 10 years. And we just had one a couple years ago. So the question is, we have another one. I don't think the market's going to fall that low. And we need mechanism to make it fall low. We need a reason for it to fall low. And in an economic sense, there isn't one yet, right? If the tariffs start to progress further, it can cause further scares and drive it lower. But a couple days ago sounded like the end of the tariff game. Yeah, I mean, lower lows possibly, but the 2020 lows would be, think of it like this. Okay, I'll give you guys some math, and let me give you something to ponder. And you could be right. I'm just saying, give you something to ponder. Okay. 9 minutes the market opens. Think about it like this. Okay. Oops, wrong chart. You guys riddle me this. Okay. First of all, the market goes up. When we all talk about inflation, I want you guys to learn something from me as well. Everything inflates. So imagine you buy a cup of coffee for $1 and Starbucks sells 1 million cups of coffee. This is a coffee. And then the next year, 3% inflation. Everybody's like, inflation is bad. Inflation is bad. Okay, well, 3% inflation. Now the cup of coffee that costs $1 now costs $1.03. And Starbucks still sells the same $1 million because you don't care about the 3 cents. You still got your job. So on paper, they sold 1 million cups of coffee as well, year number 2. But instead of making $1 million, they made $1,030,000. Okay. So you as a savvy investor would look at this and say, aha, sales went up. And you as an investor would go, well, it was $1 million last year, $1.3 million now. Okay, $1.30 million. Company's going up. So let me buy the stock. And so the stock market also, on that impression, inflates 2% a year as well, or 3% a year as well. Because the assets of the stock are valued based on the price of the goods and the commerce that's sold. As long as commerce doesn't change, on paper, companies' earnings just go up. Which is why if you zoom out on any S&P chart, it moves like exponentially. This is a compounding curve. Any person that's taken like a business economics class or any kind of math class will know that anything that curves like this is compounding, exponential. This is moving up 2% a year on top of 2% on top of 2%. This is your interest gain curve, your PE to the RT kind of curve. So even without bullishness or bearishness, the market moves like this. People like to trade on a linear scale, thinking that makes a lot of sense. This would be absolutely devastating. This would be the worst, almost the worst collapse we've had since 29. This wouldn't happen. The lows would not break previous lows. The lows would probably be low relative to here if it goes really crazy. Okay, a big crash would be like here. But like to fall this much adjusted for inflation would be probably the second worst crash we had in history. So you have to think of like the market crashing as on a log scale. And I think you can change this to a log scale. And let me show you how to do this. So you can find a bottom, right? Because we have to remember, you can't unbake all that inflation out of the market. Can we do axis? Price axis. Log scale. There we go. Watch this. Okay. On a log scale, now it makes the chart linear. Do we all see that? No more curvature. We remove the exponential dependence, right? Because Joe, you're not understanding the math of the market. The markets move exponentially, and in a sell-off, we'll find a linear low because the market is building. Does everybody here understand when I say when the market's building in 2 or 3% a year on inflation anyways? Anybody that took college math knows that when it curves like this, it's compounding, right? We all know this. How to get the free 50K? Just be here. We know this, right? So when you put it on a logarithmic scale, you see that this is the actual move. And every time we have a market crash, it finds lows, but it never undoes the last market crash low. You're never going to see this, right? And let me show you SPX. So over the course of history on a log scale, let's find out where the low will be. I see that the stocks are overvalued, but for people to say that like we are going to fall, like now here's the log scale since 29. You see how it's a linear move? This is what inflation looks like on a log scale. It's a nice straight line since the beginning of the stock market. Okay. You can't unbake inflation. Jesus Christ, Joe, take a fucking math class, kid. All right, anybody here smart enough to understand what I'm saying? Everyone here, right? All these people say, yes, you guys are all engineers and mathematicians. All right, don't listen to this guy. You unbake the inflation on the chart as a relative showing of where the market's going to fall. For somebody to say we're going to fall and crash through 2 recession lows, devastatingly so, this size crash you're talking about on a linear scale is the same size as 29. For us to take out COVID lows would be worse than the Great Depression, mathematically speaking. So you can't take the inflation out. I said for the sake of seeing where the low would be, you should always analyze a chart on a log scale. If you don't know to do that, that's why you guys are here to learn what this stuff is about. For us to bake out COVID lows on a linear scale to fall to here is bigger than 2008, bigger than 2001, bigger than 1972, almost as big as 29. To claim we break COVID lows on the actual scale with inflation removed over the period it would crash would be a worse crash than 29. So it helps you understand the magnitude of how far markets can actually fall. There's no way 15% or 20% or 100% tariffs in China is worse than 2 out of every 5 Americans being unemployed and starving and living on the streets. Okay, this is a different scenario. COVID lows are absolutely going to be the low of our lifetime. So wherever it falls, it's somewhere inside of here. There's no way we're breaking 22,000 on the S&P at all. 0% chance ever. That's just like, and because inflation works into the chart, which is why since 29, the crash was higher. 42 crash was higher. 47 recession was higher. The 72 recession was higher. The 2000 recession was higher. 2008 was the biggest global disaster in history. And that was the first time it ever broke the logarithmic lows of the previous recession. This crashed the housing market. It was so bad. So you need something that collapses the entire infrastructure of the economy to break the previous recession lows, which are actually here. So in no way at all are we even breaking the 2022 lows without something completely collapsing the economy. Okay. So on a logarithmic scale, any trader or fund manager will show you this, that the market very rarely breaches the previous period's lows unless it's really nasty. And the 72 was a really gross, 72, 73 was a really gross market collapse over those 2 years as well. But you see how it doesn't fall that much farther in the history of ever. It takes a massive catastrophe to breach previous recession lows. And so to say that, we have to bet that are we ever catastrophe that scale? And the answer is tariffs, man. Everybody's been taxed a little harder. If somebody's been trading for 15 years, I'll tell you the market's overreacting, and this is not a thing that we should worry about. There's no collapse happening. And so when I say you remove inflation, it's to put it on a logarithmic scale so you can understand the magnitude. To say we breached COVID lows is just silly. It's very silly. All right. So anyways. You guys understand what I'm saying, right? You can't look at an exponential chart with a linear mindset, like we're gonna break these lows. And that's why technical analysis, that's why I always thought it was weird, because people use trend lines over longer periods of time, but inflation has worked its way into it. Like when you're looking at the cost of something, right? Has the price of bread really gone up every year since our parents were kids? Well, you shouldn't compare price of bread to last year's price of bread, because it has inflation into it. To actually compare the value, you must look at the conversion of labor to bread. How many hours of work does it take to get a price of bread? And if it costs 1 hour of work every year, as you get paid more and bread goes up, you're going up equally. So that's not an increase in the actual price of bread. It's the same number of hours you have to work to buy it. Resiliences are good out the door. That looks nice. So you have to look at the stock market the same way. On paper, the coffee cup example of Starbucks makes bigger sales every year, but they don't really sell more coffee. They just make more money. But in reality, do they actually make more money? No, they just made the same amount, just with a little bit more value because of inflation, or a little bit more bigger value on paper because of inflation. So you look at a stock market and people use trend lines on a market that curves over the longer haul. You can't necessarily do that. If you're looking for trends, you got to put a longer term scale on a logarithmic scale. So hopefully you learned something today. We're mathematicians at the Rock Scooter family over here. So hopefully you guys understand. We all cool? Did y'all understand the whole, if you're going to look at longer periods to find highs and lows, and you pull out a chart and start drawing trend lines, you're kind of, it's cringy, right? Let's see if the data's coming through. All right, data's coming through. This is promising. This is promising. We're getting something. The numbers are ticking. You open your status right here, you can see maybe our data providers are figuring something out. Get some of the stocks coming through. Looking promising. And again, it's getting congested. Okay. Hit that lower DD band. Hopefully get a nice little... Yeah, so at the open, I think the market's going to sell right at the open. Data's creeping through. Come on. The maps, baby. So if you open your status, it'll tell you how many have pulled. 26% have pulled. So I wonder what's come through. Let's see. I'm gonna try to get along up that lower band if I find anything. Google coming through. Look at some of the stocks below MHP. Still waiting for it. Still waiting for our data to come through. We have some liquidity maps, but still waiting for the rest to come in. Waiting for lower bands to take longs up if I can get there. It's kind of a nice little setup. Let's watch. Still waiting for our data to come through. Our data providers are still kind of like slow today, so we're waiting. But anyways, I'm looking for lows off of this bottom band right here. So this is kind of where I'm looking to take a long off of. Market has resistance pressure from here, and resistance pressure from there. We're kind of trading in the middle. So waiting for our data to come through. Looks like we froze. Yeah, no, our pull stopped at like 50%. Like our data providers are still kind of dealing with the same stuff. It gets to like a certain degree, and then it just stops. So right now we're like trying to manually pull stuff together. So right now I'm waiting. We'll set the market simmer for a little bit. I'm waiting for lower lows to kind of like try to take along at this. The levels I do have are going to be this 18,300 level, and that's one of the places I'm going to be looking along from. So you're going to wait for that to happen. Let me see what I'm looking for here. S&P has bounced off the lower band as well. Gonna see if we get any kind of support here. We're close. Not yet. Close. So we'll check VIX really quick. So I'm waiting for my entry, which is going to be, I don't have much to go off of today. VIX is still pushing slightly higher. So all of my intuition is telling me to kind of stay away from this since I don't have all my data. Plus, we're kind of pressing the lower lows. VIX is creeping slightly higher. The only spot for a bounce would be right about there. So let me try to find where some lower, what was it going to be? On ES on the low side, 51.21. If we do break this band and keep falling, 51.21 is right here. All right, so show of hands. Do you guys think the bottom is in? As of this week, or do you think the bottom is not in? What do you guys think? I want to see a vote. Michigan number is going to be huge today. That's what I'm waiting for. So, and the news, you have to kind of understand the Michigan inflation expectations are going to be huge. Last read that we had were crazy. Almost 5% on the 5-year. 5% on the 1 year. Almost, 4% on the 5-year. So this was huge. These were huge changes, right? These Michigan numbers are going to be huge on the market today. So a jump of the expectation. This when tariffs were quote unquote going to be in full effect on the last number we got on the 28th of March. So 4.1% is extremely high. And 5% was going back to 2022 highs as well. With the tariffs being shelved, is the Michigan number, now again, that maybe the Michigan number was tallied before that, is the Michigan number going to be high and the market's going to overreact? How delayed is this data? I'm curious when they do the survey. There are two versions of this data released 2 weeks apart, preliminary and revised. Preliminary release is the earliest, so it tends to have more impact. So I wonder if they tallied this data, like Tuesday, when the tariffs were baked in, and they're going to revise it in 2 weeks and come out with data that's going to be wait, hold on. Is this the revision? Hold on. No, we're at the revision, aren't we? Yeah, this is the revision period on the previous. Okay, so we're going to get the revised off of the 5%. So we'll get a new number coming out. So we'll see what we get. So I'm stuck in between the two levels here. But yeah, no trades yet. I'm still waiting for our stuff to come through, hopefully soon. It was really delayed. For some reason, like our entire system is pulling some data, but it's still freezing up. Now I'm going to look at some stocks, see if we get any clues from any of the other stocks. NVIDIA, BL, that's good. Amazon. Nothing yet. Google. And when the Michigan numbers come out, the market's going to move pretty quick. I'd like to see a break to the upside. MHP breaks, I love to take. And wow, Google today just skyrocketing. This is great to see. Like I said, I believe the bottom's in. I think the market's responding very favorably, at least today with MHP breaks. That's a really good sign. You might try to test the highs again. But I don't like this kind of ban play like this. This is too much movement still with high volatility. I'm not very comfortable here. I do want to see the VIX try to find lower lows, and I don't know if today is going to be the day that we get it. But if we do break and keep going, then hey, we're good to go. I still think that we're bottoming out. I got my options, my first bite of my options trade already loaded up at the lows yesterday, which is great. Good to see that. They should rename themselves to data non-providers. There we go. Now we're coming through. A little congestion here. Something else. Got another burp of data coming through. Go MHP. There's no way. 432? If that's true, that's incredible. Data coming through on this. Like what I see. Just waiting. Michigan numbers coming out would be a big mover today. So I want to make sure I'm not on the wrong side of this. This morning, the core come on now, come back. Core PPI month over month change was negative, and the year over year was also down as well, and lower than the previous and lower than the forecast. PPI month over month also all the same, lower than what was expected. We've been seeing a good trend in the PPI at least. You know, the price index is very, very crucial for inflation. I don't know how much of the tariff goods or the supposed tariff is baked into this since these numbers are delayed. You know, obviously being a once a month data point may not have price. It should have priced in the tariffs, I would say. But the data does come out now, and I wonder if they revise that in real time, like before they release. So the question is this reflecting tariffs or no tariffs? And it looks like it's not reflecting tariffs because we would have seen a price increase possible in general. But goods sold by manufacturers. So this could just be American manufacturers. I'm not sure if the PPI is looking just at American manufacturers because we wouldn't be tariffing ourselves. So that's probably relative to, well, actually, but they'll be experiencing tariffs if they were importing. So yeah, I'm curious if this includes the tariffs or not, if they revise the number, if you paused them. So interesting thought. What do you guys think? For some reason, whatever's going on, how long's the problem going to last? We don't know. I mean, it's been working smooth for the longest time. And for some reason, just when the market got crazy like this, I mean, it's like congestion on top of congestion. There's something going on. And they're still trying to troubleshoot it every day. The problem is we get like a 5-minute burst of information to troubleshoot off of. And so the data providers are like, it's your fault. We're like, it's your fault. The intermediary is like, it's both of y'all's fault. So everybody's like congested. In a traffic jam, everybody is pointing to the person in front of them and behind them. But in reality, everybody's contributing to a traffic jam, right? So in a traffic jam, you want to honk your horn at the person in front of you always, but they want to honk their horn at the person in front of them. So, and there's like a mathematical reason traffic jams happen. It's just the net influx is greater than the net outflux. So people can't leave as fast as they enter the system. And we're kind of dealing the same thing with the data. And we can't identify the source of the congestion. We just know that everybody's timing out in the middle. So something weird is happening, and it's only correlating to the pandemonium in the market, right? And what we know in tech and in financial platforms and stuff is when the market gets congested, your orders and trade evade get delayed by like 5 seconds. So it's kind of like when everybody and their mom is now in the market freaking out and getting margin calls and everybody's systems are on chaotic overload right now. The domino effect tends to happen to everybody. All the users downstream are experiencing something. We didn't change anything. We woke up and everything's just kind of like delayed in time. Like we're getting our data in batches. It's like it's coming in and coming in and coming in like a little bit at a time. So hard to say. But yeah, it's like Y2K. It feels like Y2K. So kind of trading inside of the range here. The question is there a short op of MHP? DD ratio came in bullish, so that's pretty good to see. So one of the things that we note is that we don't trade off of the upper band. The short setup, I don't short when this ratio is less than 0 or greater than half. So far, no irrational signals. Market's pretty stable. SPY's above its own MHP, which is good. I want to see today, though, if this is actually truthful. What I want to see for the bigger, longer reversal is support off of there. So breaking through MHP is fantastic. I do like to see that. Opening above it. There we go. Finally, the data comes through. Which is good. Good bull setups today. Now, what's interesting is that I know we would have gotten some really good trade setups inside of here. At least now I know that I've got liquidity pockets from here to trade off of and liquidity pockets from here to trade off of. There was no actionable pivot out the door, which is good. I would have probably sat on anyways. Probably good that we did. Inside of here, I've got a long setup there and I got a long setup there. Super easy. So we get QQQ. This is good, y'all. I do like it. And QQQ not in yet. Still waiting on this one. Well, at least you have SPY. DD ratio greater than half, which is good. So we're supporting down here off the lower bands. That's good to see that. Nasdaq supporting up the lower bands as well. I'd like to see this market try to sell. This is good. This is good evidence that the bottom is in. Greater market is good. DD ratio greater than half. SPY above MHP. And let's go ahead and look at today's monthly maps to kind of get that word here. And sorry for the delays, you guys. Like I said, right now I'm talking in chat, and I basically told everybody that I'm working with that somebody's getting fired today. I don't care who it is. I'm in a mood where I'm firing someone today. So it'll be a bittersweet moment for somebody, but I'm about to remove them from our umbrella. Whoever it is, I don't care. I'm going to make examples so everyone else works well. Everyone, it's either new data providers or someone else where I'm removing something from the equation today. I'm tired. I'm sorry for this, you guys. So we need a more robust system, and we need somebody that's going to be able to provide that. So if the data feed guys have to go, we'll find a new data provider. Trust me. This is the most important trading that we need to pay attention to. This is millions of dollars of lost opportunity. So we got to make sure that we get our data providers going well. Very nice on the monthly map front. We are well supportive in the liquidity maps. We are well supported in the monthly maps as well. So I think what I'm going to do is I'm going to get new data providers if I can. I'm probably going to have to fire these guys. It's devastating to lose a job. Well, it's not my job. It's my job to pay somebody to do a job. If you don't do the job, I can find someone else to do the job. For sure. Somebody else's family is going to get paid. So the problem is that I'm live on a TV show. I shouldn't have to be fighting any problems at all. People should be doing it on the sidelines. So too much. We need to hire a team to oversee whatever's going on and do very strict diagnostics on it to make sure we understand the problem. After the first day it happens, it's like day 3. People are still kind of like not understanding what's going on. It makes me feel like I need, the competency isn't there. And that happens, right? Fire Victor. Look, student engineers still get hired by somebody, but do you want to drive over a bridge designed by, Captain Keg Stan of the frat? I don't know. You know what I'm saying? Gotta just be honest. I'm going to find the hole and I'm going to patch it for you guys. We get the software working. Super good. So I think the data providers have to go. When I say fire, I'm going to fire the data providers and they'll be fine. I'm going to find somebody better. Perfect bullish liquidity maps. I love it. Okay, here's our Michigan numbers, I think, right? Yep. Let's see what we got. Fall to lower lows. I'd like to grab the dip today. 47. Oh, that's good. These are good compared to what they were. Yeah, so it's either the company in the middle that's managing the black box calculation, or it's the data provider. So one of them has to go, and we have to get kind of like on page with somebody that's going to be able to have good diagnostics on this and understand. Wow, 56. This is great. Current conditions low. This is the lowest it's been in a while. This is actually really good. Okay. 57 on the consumer sentiment. Consumer expectations. Wait, where's the other? The inflation. Come up. The actual. Oh, it's baked in the tariffs. Okay, yeah. So the numbers came in higher. The inflation expectations came in really high. But this is just because, you know, we got the tariffs baked into it. But I think the next number is going to be crazy, like a little bit better. Yeah, so these came in very high, by the way, the inflation, which is really what people care about. 6.7% on a 5%. That's crazy. So do you guys think we're going to have 6.7% inflation? Yikes. And that's like pre-tariff as well. So that's going to pull the market down a little bit. I'd like to see that hit a technical low so I can get a nice little trade off of it. Okay, so let's get our targets here front and center. But yeah, we are trading well into liquidity pockets, so that's good. QQQ's lows are still about 410 over the next 2 weeks, which is good. SPY's lows have gotten even lower. So even here we are settling out. So SPY can actually find 450 lows, I would say, over the next 2 weeks. So my lowest low, if I were to go in and really dive in heavy, would be about down in here. A second bottom potential, I would say, would be next month's expiration, closer to the 460 level. But we are actually, no, sorry, 500 level. So we've got about the 490 level here, the 500 level here. We've got about a month of sitting inside of this area. So it's looking like we have bottomed out so far. According to monthly maps, we have support all inside of this range. So inside of here, this is all liquid enough, which is great. That's good for the longer haul. Now let's get a day trade in. I know, I hate being the bad guy. I don't want to fire anybody, but I'm kind of in the mode of like I want the expert to tell me what's going on. I want people to like, when person A points at person B and person B points at person C and person C points at person A and B, somebody in that equation needs to be replaced with a leader that's going to rally all three of those cats up and, you know, make sure everyone's on the same page. All right, so a little pullback here. Let's see if we get any lower lows on really key pivots. DD ratio is great, so lower band is good. Liquidity pocket is good. Let's find one. SPY doesn't have anything yet now. Resiliences are good too, to at least hold the gap fill. They were still okay. QQQ is really, really far below, which is good. I like seeing this. All right. Liquidity pocket on Qs. Let me find a good dip to buy down inside of here. I don't want to rush on this because of the market movement, but I do want to say that if we tap this lower low here, positive res, this is a good setup for a long. I do like this in here. From here to here. Let's let it dip one more time. In an LP, we like to trade off of the bottom here. 445 to 447 is a good setup. This is about 80-point run in NASDAQ. Right down in here. Res is positive too. We might actually bounce off of the upper box as well. So we have resilience positive, which is half gap bounce. This is good. This market's going to go up from here. If all things are being equal, we should go up. And if we break these key levels, then I'm just out. So if we lose 445 on QQQ today, I'm going to just kind of sit out into the lower band. Not chasing the green candle here yet. LPs are great setups to trade. So here to here is about 80 points lower, right about 410, give or take. And that looks really nice. But yeah, I think the market's going to be stable today unless something changes. It does look kind of stable. So I'm marking my LP lows right at about 410, give or take. And then let's look at S&P. It's nice. Can I tweet my bottom calling picture today? I just did. I did a little bit ago. I thought I did. It's there. All right, spies on an LP for 10 points from here. Could be an LP setup. All signs are good. Market's rational. Things are nice. Could be a long entry from here. The best setup that you have today is supporting lower band. This would be the best setup. But from here, I think we're good. I think it's going to kind of hold here. Market's looking pretty solid. Bull zone break. Long setup in here. I probably need to get a good entry on this. So bull zone support, ratio greater than half. Market's good. Market's good for a rally. Can't complain. Looking solid today. Yep, looking good. QQQ. We need a good entry point though. Like I said bottom was in. I feel it. I can feel it in my bones. Let's watch the resilience numbers stay positive. That's good. Let's look for VIX. We need that VIX to decay down a little bit though. It's not moving as fast as I'd like it to. Yes is going to bump into resistances here. I missed the long entry because our freaking data providers were shit in the bed today. But yeah, it's all bullish today. So I did the analysis this morning. Everything's bullish. Greater market's all bullish. 100% bullish. Everything's good. All the indicators are good. I secured a big portion of my options trade yesterday. So as long as we keep moving, I'm super excited about it. First run of my options trade is up 25% today already, which is good. I like to see that. Again, I'm buying the dip as it falls. A bigger trade. Ah! You had a 23-day winning streak and you stopped? Oh, bro, what happened? Market's looking super stable today. I do like this. Hold on. I'm going to get a drink. Yeah, Gamma, bro, you'll be back in no time. You're on a killer streak, man. All right. Now what do we do from here? Market's cool. Market's starting to move. We do have really good, strong bull zone support. We have all kind of long entries in here, so that's the best part. Everything's supporting a movement up. The problem is we're still resisting key resistances, but I do feel like we could break today. Here to there is a setup. Fill the gap is a setup. There's a lot of setups in here. There's liquidity pocket there. Monthly maps is good. Everything's good, baby. Remember, they call me the bottom king. Well, that kind of sounds kind of gross. Just kidding. I said that joke on purpose. The king of calling bottoms. If I'm right, and that was the bottom, we should be good. LOL. I feel like the bottom king would be somebody wearing assless chaps. That'd be the true bottom king. Look at how good my ass looks. I'm the king of bottoms. Got it, bro. You're the king. The bottom king. You sure you want that? Yeah. The skin flaps. Check out my butt cheek skin flaps. Okay. So today, guys, market's got a liquidity pocket. LPs are really good. Let me mark them for you. A liquidity pocket is a space in between a bull and a bear zone. So market's good. LP here. LP here. That's good. That's good. Again, I'm kind of trying to find any worsening scenario where I can at least buy a dip. I'd like to see the market surprise crash today, which it very much could. VIX is still in a positive bullish movement. LPs will buffer any selling. So the market's going to have a hard time falling through this. Illiquidity pocket down in here. So if we lose 525, it's going to fall another 40 points. Just be careful today. It's you know, in trading little area right here. For funsies, let's grab one. Around the LP. For funsies. Just one. See if I'm there. QQQ is not updating, but we are at the bottom of the bull zone. So QQQ has a... Oh, I'm sorry. I'm at the wrong spot. Damn it. My entry is really bad. I wanted to get LP on Qs, which is still a little bit lower. We got about 50, 60 points lower than this. Oh, shit. 410. Oh, I already did mark it. Okay. I'm just so distracted today. Okay. LP on Qs will be nice. Let's see if we get a little bounce here. I do like liquid markets. Grabbing it in 2 accounts right now. Get a nice little play off of this one. Just one contract. Resilience is good. Liquidity pocket's good. Ideally, I want to grab the long from right here. So let's, maybe this can dip a little bit further. I did get in way too early on this because I was looking at the wrong thing. Let me get SPY on here on the front and center. Sometimes it's good to be patient, you know? So these large 1 minute candles, 584 down to 480, about 100 points. Wow. So I'm looking for 100-point moves. So I'll take about $1,000 bites of this, even on these 1-to-1s. Looking solid here. Market's still trying to find an excuse to sell off, though. Volatility's still creeping. I don't like to see that. But the scalps are good. So liquidity pocket on SPY would be nice. I did trade one on NASDAQ. About 6 points lower on S&P. Gotta mark this as well. I'll just take it in $1,000 profit chunks. Every time I hit LP, I'll take it. Come on. More green candle off of this. Trying to get 10 points at a time. Let me close that out and get the LP. My entry was really shitty on that NASDAQ. And let me sit back and wait for this to play out better. I just closed out because I didn't like my entry and I feel like I got lucky getting that 800 bucks. I need to really get solid on an LP though. So SPY is close to, let's see, 10 points lower on SPY. Let me mark it for you guys here. Yeah, it's all bull setups here. I like it. I don't hate it. I like to get a better entry though. Close that too early. We should get some of that luck. Ooh, baby. My options trade's up 25% off of yesterday. I'm aiming for 100. I'm aiming for 1500%. Let's see if I can 15x my money though. If I called the bottom, I loaded up on my options yesterday. I'll tell you guys the trick, what I'm looking for. 500 viewers, trade a 500 account. No, today 500 viewers is ETF account. 3 ETF accounts today. So we'll see if I get something. All right, LP coming through. 26, about 15 points lower from here. Yeah, right about this green line or this gray line right here. Get my little labels here. Liquidity pocket. I always like to label these for y'all. Get up in there. Get up in there. Any more news coming through? Nothing of financial juice. Nothing, nothing, nothing. William speaking in 43 minutes. So yeah, things are pretty clear today. Those inflation expectation numbers are pretty brutal today. But they're also pricing in the tariffs, so which you don't have anymore. All right. Here's the question. Is that the trade? Is that the one? All right. Let's see if we get it. Bear zone. All right, right on the edge there. S&P. Let's just put 1 on it. Conditions are good. Conditions are good. Conditions are good. Now, if the market just has a surprise sell-off, I'll be a little reluctant here to, like, you know, celebrate. But I'm gonna trade liquidity pocket every time. I've got here, and I've also got maybe 20 points of downside. That's kind of the problem here because the downside is very much like this is a really tight transitional market. There's a lot of potential downside here. So I'm kind of like taking it very, very, very softly at this liquidity pocket. I try to take this trade every time if I can. Statistically, it's like it doesn't look good, but the way it's trying to sell and the way the volatility is picking up, it doesn't look good. This might be a terrible entry, but we'll see. I got to take it anyways, statistically. So just one contract to try again. And any downside from here on this break, I'll just wait till long off of the bottom. So if we do break and I take a loss, I'm definitely going to grab it right there. Resilience is positive, so half gap bounce should be good. We shouldn't be filling the gap today, but we'll see. Let's check back in on QQQ and see where we are there. My brain is like just telling me watch out for like big nasty red candle coming out of nowhere. Let's keep an eye out on Qs. DD ratios deteriorating a little bit, but still good. QQQ has a liquidity pocket right here. I'm right on the bounce point there. That's the spot. Let's see if we hold there. like to see everything stabilize here. You get on that. All right, there's a long entry point. I don't know if I want to double down. Market's too volatile to double down, so I'm going to kind of chill on this. Just ride my one contract back up if it moves. Losing an LP could be a really nasty fall, but I'm gonna still try to hold on to it. So you got 20 points as my official stop now. So right on the edge, 98 to 78. This is kind of the edge here, so I might pull the plug on this in a second. All right, I'm gonna pull the plug. I'll get back in on the other side of this. Losing that stop loss, yeah, that wasn't the best. Okay, I can get bottom band as well. Nasdaq's getting close. We're in IPs right now. We get lower lows. Yeah, lower band is it. So I'm going to wait for my pivot. I'll try one more stab at this here. Nasdaq is there. S&P is there. It's a good strong pivot, these green lines here. So I'm going to wait for that. We busted the first liquidity pocket, which is unusual. Data is still good. Ratio is still hanging on, but not good enough yet. So I need to aim for the second pocket down here. Dip to buy. So I'm going to let this fall a little bit more. QQ is there. SPY is there. SPY is really close. Pocket number 2. 10 points lower. So right at 51. SPY's an LP right there. So let's hit that level and let's get it. Oh, DD ratio is now going less than half. Brutal. Take it one more time. If we lose this one more time, I'm just out for the day. So I should be good here. Solid. It's a solid move. Ratio is 40 though. That's not that good. Got my drawing tool from yesterday. Where you at? It's not there. Liquidity pocket and bottom bear zone lining up to each other. That's the LP trade. Get my 20 points and pocket it. So I usually go from zone to zone. Indicators are deteriorating a little bit, but it doesn't look too bad. All right, let me put SPY here. Confirm on the bull zone bounce. I'll take it one more time. Good setup. I always trade LPs. The 90% trade setup and the DD ratio is greater than half, which is good. A good little scalp there. Yeah, we'll see what we end up getting here. Pocket's good, supporting here. Yeah, bottom band is good support today. QQQ, not in a pocket yet, but QQQ is getting close. Let's watch QQQ on its own bounce here. Oh yeah, Nasdaq just hit it and smacked it really hard and then bounced off of it. Some of our best pivots right here. It's a pretty good trade. Hopefully get a reversal today, be kind of nice. Tap Nasdaq on it in just a second. Still have just really, really, really big volatility going on here. Let's grab one right on the border here. Oh shit, I'm on NASDAQ. Whoops. I meant to be on ES. Well, NASDAQ dipped a little harder than I thought, but we'll see. Dip to buy. I was kind of hoping I'd be in ES today, but that's okay. Let's hold the silver band, baby. DD's hanging in there. Fingers crossed on this one. Just one. Volatility is still crazy. I can just, one contract is enough, trust me. All right, there's the bounce. Let's go. Adding to my other account. Let's see if I can get it. Get a better entry on this. I got in a little early on this one. Picking up. Now this is I don't like this volatility here. It's starting to get really gross. And our liquidity pocket and SPY I think should be okay, but you know, I'm still kind of like waiting on this. The band usually holds, so and if market's crashing out, then we're gonna lose this band and die. Ratio is less than half against stocks are selling pretty hard, and we're not getting that kind of love that we want to see. Unfortunately, this isn't the best, but I'm gonna take the trade anyways. Gotta take the trade. Gotta take that trade. So let's watch QQQ around the edge here. LP, SPY. I'm feeling it right. What do you guys think? Up or down? DD is a great bounce all the time. They're pushing lower here. Trying to. Yeah, trying to. Take a moment to appreciate what's going on with our prop providers here. You guys are using prop accounts, so we get 30% off with all the majors. Take Profit, one of the favorites here. Tradeify, one of the favorites here. Today we're doing giveaway ETF, 3 accounts today. A little quick commercial in the middle of the stream. Just trying to hold. Doing all right there a little bit. Use code ROCKScooter everywhere you go. Get the best prop firm deals in town. I'm liking it. Nasdaq running an IP right here. So we got push all the way from zone to zone. Wow, we can retrace all the way back up to the top. That doesn't look too bad at all. Let's go. Let's go. Come on through the zone. I'll hit from zone to zone, here to here. Hang in there. Fingers are crossed. Hang in there. Took profit on that retrace. Looking good, looking good. Back up in the IP here, looking solid, looking solid. I just took the retrace and closed out, took profit across the board. I traded this in 4 of my accounts. I didn't do it in all 5, but I scalped this a bunch in the 4 accounts I'm trading. Looking pretty solid. Ooh, not bad. Okay. I still don't like this movement today. All right, give me a second. I'm going to go to the restroom. I'll be right back. I'm back. No clue. I literally come back and my computer's just like resetting. What a crazy, like, life has been like good for me, but then life has also been unlucky for me. I don't know what's going on with my PC. I need to actually sit down and figure out. And then Pickle's eating our shoes. It's like so many crazy things are happening. Welcome back, guys. Thanks for tuning in. Sorry for the delay. All right, liquidity pocket QQQ. Is this the promised land? Let's see. Looking solid here. Trying to move. SPY's doing as well. IP. SPY. Is the bottom in, y'all? I trade whichever one's nearest the pivot. So, it's a little dip down in here. So for instance, today when SPY hit its liquidity pocket, I was trying to long S&P. I pushed Nasdaq on accident, but they're going to rally at the same place and rally at the same time. So it doesn't matter really which one you're doing. You can kind of like, it's really no reason to choose one or the other than one of them may seem stronger. Sometimes Nasdaq will do its own thing. So with the S&P, if the S&P hits a target, I can trade both of them. If Nasdaq hits a target, I kind of only got to stick with Nasdaq because Nasdaq is independent of the S&P. There's stocks in the S&P that Nasdaq doesn't have. So S&P will move independently. Sometimes Nasdaq can sell while the S&P is going up. So you got to be careful there. But in reality, when you hit an S&P pivot, you can choose one or the other. To be honest, doesn't matter. Clear my recycle bin. LOL. Reboot the computer. Yeah, and it was like another blue screen of death. I think one of my components is messed up, and I don't know what it is. My hard drives could be reaching end of life. That kind of happens sometimes. What broker do I use from options? Webull. Pickle has no balls. He has to chew on something. He normally chews on his balls? Oh, man. Yeah, we came home last night. He's ripped up so many pairs of shoes. Thank God he hasn't ripped up any of my nice ones, but I'd turn him into dog food if he did that. He ate up like... He has an affinity for chewing up Nikes. He doesn't really chew up like my Louboutins. He doesn't chew up my Barbados shoes. He just chews up my Nikes. You know what I'm saying? And IDOX Nikes yesterday. He chews up Nikes and he chews up fake Chanel. Fake Chanel slippers. Nice and clean today. I do like what I see. For upside potential, I can see it. We're in IP. You know, IP will trade all the way up to next zone. 526 level here. Here's the trade. All the way from zone to zone. You guys know the rules. Zone to zone. Bull zone to bull zone. Okay. I finally closed my last of my position. My computer freaking goes on the fritz here in the middle of me having a contract still on the table. I finally closed the last piece of it, so I'm fully flat now. This is the haul today. Not bad. That was a clean day. Even without our shit, man, like the universe gave me some... I could have been longing here, taking a loss and longing again. I think today's delay actually gave me a better chance of winning. Not bad. Check thermals, check RAM. Yeah, it could be overheating problem as well. Ooh, 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 ooh. Good deal, good deal. Can't complain. What it means is I should just build a new computer. All right, iDoc, I'm gonna spend 20K on a new computer. Actually, I don't need that new of a computer. On Twitter. All right, guys, we're gonna do something. We're gonna do something fun. Everyone, do me a favor. To enter today's giveaway, you must go to this tweet. You must follow on Twitter. You must retweet it. So today's gonna have some rules. You must sub to the channel and comment the gift. I'm giving you guys funny rules. That's it. Interact with that post to enter the contest today. We'll make it different. Retweet it if you can. You don't have Twitter? That's okay. You just can't enter today's drawing. But we'll do it. You can't enter today's drawing for the ETF. But in general, we'll do another drawing that you guys can enter if you don't have Twitter. So today's prop account giveaway is a Twitter thing only. Like I said, I'm going to make it different every day so people can't, you know, game the system or just show up when it's time for the giveaway. We're going to make sure that there's a thing that you do to prove that you're here. Make it fun. We're going to have 5 entries today. You can only enter them one time. First time seeing Matt with the slight fade and apart. Matt finally has a haircut. It's really often haven't had a haircut. Plus, I'm looking younger, apparently, because I've lost like 8 pounds, you know? She drove him to my barber to get that nice fade. Oh, I know. So basically, the other day, I had a haircut at a building, and iDoc had a bridal, I don't know, dress, bridesmaid's dress alteration. Also, she comes in here, she's like, so I gotta go like 15 minutes to River Oaks to go somewhere. And I was like, I gotta go in 15 minutes to River Oaks to go somewhere. And she's like, where are you going? And I was like, I'm going here. And I showed her the address, and she's like, wait, I'm going here. And we actually were going 3 buildings away from each other across town. Coincidentally, my barber and her alteration place were literally within walking distance of each other, like 3 buildings over. Funny. So we rode together. Coincidence. The question is, what happens today? These little W-shaped moves like this, the market trying to sell and trying to rally and trying to sell. Another liquidity pocket take right here. Should I long up this bear zone for one more pop? You don't retweet for nobody. Your timeline is too precious. That's okay. That's okay. Part of it is to market the prop firm, not to give away, just to give away the account. We have to actually give the prop firm some love too. Twitter, now it's to help the prop firm get some exposure as well. Engagement score, man. I see it as a math equation. I pay for prop firm accounts, or they give us prop firm accounts, and I get engagement out of it, just like buying an ad. You buy an ad for engagement. If I pay $100 for a Tradeify account and give it to you guys, then I might as well get, 5,000 engagement score, impressions and all that from it. I get like nothing from Twitter. I repeat, like nothing from Twitter. I think I get $70 Twitter paycheck. So today was the Arby's trade. You guys saw it? How many people here took the Arby's trade? Fan favorite. Top Step does not do any discounts. No. I'll tell you guys, as much as y'all like Top Step is slowly, while it's always going to be a mainstay because it's the first, Top Step is slowly going to become like more obsolete. There's no more push to drive sales for Top Step. They don't have an affiliate program. Right now, everybody's using Take Profit. Everyone's using Tradeify. These are really the firms that are kind of like more, it's like Top Step was the king for a while, but I think there's going to be a lot of like little kings that are going to kind of become equals. So Top Step is pretty much in decline a little bit. And then there's others like Top, Tradeify and then Take Profit, which are like, they're not above Top Step, but they're getting close. They're stealing a lot of market share from them. And Top Step is just continuously changing their roles and kind of like trying to lead the pack. And they're always going to be really, really big and really good. But most of the traders these days I work with don't use them anymore. They're starting to transition more into instant payouts or direct to fund and things like that. I mean, Top Step just put in consistency rules that kind of piss a lot of people off. They made it to where you can't use unlimited funds in your XFAs anymore to roll into your live account. So it's kind of like what used to make them cool is no longer that cool. And there's other firms popping up with the cool rules again. So the bid-ask spread on SPY widening recently. Yeah, Vin, that's exactly what it means. Like less liquidity. The spread will widen because of the volatility, or because of the lack of liquidity creates that volatility. Top Step will always be a mainstay, but I'd say in general, you can't really beat direct to funded. I mean, this is by far the easiest thing. I think I got my first paycheck from Tradeify within 10 days of opening the account. It was nice. I made all my money back in the first 10 days. I'm still going. Why is Take Profit not responding to your emails? Take Profit has recently been overwhelmed in their customer service. If you won the contest, like I said, this is between them and their customer base. It's been reported that their customer service is overwhelmed. Trust me, I had a question about my affiliate payout. And it took them like a week to get back to me. So in this environment, I'd say be patient with everybody. Like my data providers are shitting the bed. Everyone's customer service is overwhelmed. Right now, everyone's blowing up accounts left and right because the market is stupid. And I've been in the business long enough to know that when the market is stupid, everything that supports the market or works on the market is also stupid. So just be patient. When 1 million people are blowing up and losing their accounts, your broker's phones are ringing off the hook. Everyone's in a margin call. Everyone's busting their account and then blaming, hey, I didn't get filled in time. I tried to exit the trade and won't let me do it. Can I get a refund? Customer service is overloaded with stupidity right now because people are trading in this environment and doing dumb stuff. So through Milesh, just be patient, I guess, is what I'll say. Yeah, I would say that that's probably what's happening. There were other reports. I think Brian Stonk reported on his Twitter that their customer service was absolutely overwhelmed, and he was reporting it as well. Another big influencer guy. So we're all experiencing it. They're not responding to me quick either. Trust me, I email them every day with the contest winner. Takes them a little bit. RBs, you did follow, retweet. Yeah. Top Step will still be here when others get shut down. Yeah. Topstep is trying to stay legal and ahead of the game. So Topstep is like a consistent main play. Topstep will always be here. They'll always be kind of like leading the pack, but they're not going to be the hot prop firm anymore, ever. They're kind of like the parent, if you may. They're the ones following the rules and leading the pack and making the right change for their survivability. But because of that, they become less cool. The more rules you have, the less cool you are. So prop firms go to the cooler rules. And right now, take profit is unbeatable rules. I mean, it's too good to be true rules. And that's why everybody's going there. But the 5-day thing is ass. Right. They always got something that sucks. But largest volume trading day in history this week's shark bait. No way, really? What's today? 100% agree. Jay's been experiencing customer support overwhelmed. Yeah, everyone's overwhelmed. We're overwhelmed. Slacks is going nuts with all the, hey, where's the liquidity map? So why is it not working? It's just like, oh yeah, so you have to do something full tilt. Since I don't use them yet, I don't know what it is you have to do. There's something you have to do to elect the no fee, and somebody here mentioned it the other day. They are the adult in the room. Kristen said, yeah, they're like the leaders of the pack, but they're not going to be seen as the coolest firm anymore. They're still going to be probably one of the biggest, but the tastes are changing. Traders are flocking to Tradeify and take profit. I'll tell you directly. I know how much you guys buy of each one of them. And those two have just amplified in popularity in the last 2 months alone. All right, let's analyze the market here. So pretty good. Liquidity pockets are still solid. The S&P pressing the upper pocket here. Risky along at the top, but still, we took the trade, like bear zone to bull zone. We know this rule, right? Sorry, bear zone to bull zone. DD band, if you held through there and took a long, we go from bull zone through bear zone to bull zone. We call this the Arby's trade. Anytime you have a bear zone sandwiched between two bull zones, you trade from zone to zone, just like this, bull to bull. What happens is you have a combination of an IP trade, which is here to here, which you can take when the DD ratio greater than half. We always take that one. This one. And then you have a combination every single time trade from here to here when DD ratio is greater than half. When it's greater than half, I hold from here all the way to there and I closed out. My computer shut down in here and I logged back in just in time to X out of the trade on the last account that was still holding on, which is good. Take profit seems good, but don't like that they changed the drawdown rules to intraday once funded. Right, everybody has their one, but it's only drawdown to a certain point, right? There's a certain point it becomes end of the day drawdown, right? Brian, isn't it end of the day at some point? Like after you pass a certain threshold? Once you get over the buffer? What's the buffer? Is it break even or what? So until the trailing threshold in profit? So what is that threshold on, like, give me an example on one of their accounts. You can't draw what to do? So yeah, so basically it's like intraday until you get to a certain level and then it becomes, is it 2K? So once you make 2K, it's static. And these are the same rules that like Apex and other people have. I think now. Apex is like that, right? It's been a while. At a certain point, you hit a buffer and you're good. The Apex buffer, I forgot what it is. 50K, 2K on 50K sounds about right. They were going to change their rules so fast. I haven't touched Apex in so long. I don't know if their rules have changed. So, but yeah, there's usually a buffer. So that means you just have to make your first trade your best trade. Like wait for everything to line up like today. Everything lined up at bear zone top. This is a perfect setup for that long. This just is interesting. So not fearing this at all. There we go. Green candles out of nowhere. Let's read the news. What do we got? Trump saying something? Anybody doing something? I don't fucking care. My options positions are crushing today. Let's see how much I'm up. I'm only up 25%, but we'll see. Nice, lovely candle there. Fed Williams tariffs will boost inflation between 3.5 to 4% this year. Oh, Williams is talking. All right, I told everybody to respond again to enter the contest. You have to do me a solid. We're gonna see what let's see what happens out of this. Let's get some moves here. To enter today's contest, go to this tweet, type a funny GIF in the chat, and retweet it. If you don't retweet it because your timeline's precious, that's okay. But at least you got to post in that tweet as well something funny. It's kind of like playing Cards Against Humanity with me. You must make me laugh. What was that candle news? Yeah, Williams is talking. So we just said tariffs will boost inflation between 3.5 to 4% this year. So the bet on that is that the Fed is not going to cut rates as fast, blah, 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 blah. But that news is pretty decently. Who knows, right? The tariffs is just such a crapshoot, and the tariffs could change tomorrow. So take it with a grain of salt. Anything Williams is saying, the market is trying to guess that this is implying that the Fed's going to do something or not do something, which they're not. It's very predictable what the Fed's going to do. They're not cutting rates this year for a while. People are saying May, but I think it's going to be a while. We're going to get a rate cut. No, Williams is talking. I already told you guys. Williams is talking. That's it. Market just moved up and came right back down. The algos just listened to the word tariffs, inflation, expect growth to slow considerably to 1% this year. So that's, again, just Fed's expectations. Nobody should be surprised by this information because this is something quants are all going to have figured out. QQQ is still a liquidity pocket. Do I want to take the long on QQQ? This be over trading at this point. Dare I? MNQ? Dare I? One micro. I'll play this whole range. This market's just ranging like crazy. Two micros. Come on, baby. This is just stupid behavior. The market's not picking up any steam to rally. Up, down, up, down, up, down. I'll just put macros all inside of this range, whatever. Who cares? In this liquidity pocket. S&P at the bottom is gap fill. I think Williams is saying something anybody doesn't know. Let's stick to the plan. Jobless rate rising between 4.5 to 5% this year. This is just clickbait for traders. This is not going to be a surprise to Wall Street, things that Williams is saying. I just got some micros on it. Might as well stay long. Data's good. Data's good. Data's good. I tried to long at the QQQ LP. But I got micros so I can hit both of them. This range day is kind of weird, so I'll trade from here to here. Or, fuck it, I'll tap it one more time down here. If we fall again, I'll just throw some more micros at it. I just kind of want to just be long in case something just happens. You know what I mean? Kind of how I feel about it. So Here, 445 to 444 should be an adequate stop, but instead I'm deciding to hold through and just trading with micros. Let the market just be dumb and just put some micros on it. I still feel bull case, but whatever. All the data is looking solid, even though the market is trying to sell off. Let's move this out of the way here. While he's measuring the retracement areas. Market's trying to sell off, but all the data is looking solid. I don't not agree with it. I'd love to hit DD band trade one more time. Bottom LP would be nice. LP1. Clone LP2. Is roughly 50 something points lower from here. So right about 220. So I'm marking where the bear zone tops are, just about where they're going to be, just so I can eyeball where it's going to be. Since I can take, 200 points of range, might as well put 2 micros on it, because 200 points of range is not a lot of drawdown. Like I said, this account is up $2,000, so put micros on it. Trade 1 LP. I've got another one, bottom DD band right here. Good, ratio's good. Double check the VIX is doing. VIX is still in a bullish liquidity map. VIX is finding higher highs for the session. Yeah, even if I take 100 points of drawdown, not really that bad. I'm talking like a couple $100 up or down. So Williams talking about jobless rate going up. Growth slowing down, tariffs making inflation going up. This is just clickbait. Nothing too crazy. I don't think this is really like a fundamental change to the dynamic of today's market. No one's being surprised by something Williams is saying. He's saying what everyone's expecting. Fed commentary never changes the direction or trajectory of a market. It's just kind of like markets will sweep to try to find liquidity just in general. They'll widen it because the keywords are being said. Obviously, market raised up to stop out some shorts before it lowered, probably, but we'll see. I mean, the data that came through was obviously traders lighten bets on Fed rate cuts and see 3 policy rate reductions in 2025 beginning in June. So this was a change earlier, and that understanding comes from the fact that with lessening tariffs, this is a conflict of what Williams is saying, but with lessening tariff load on inflation, that the chance of Fed cutting rates goes up. Oh, hey, look at that. My two micros winning. Winner, winner, chicken dinner. Let's go with the $200. Let's go. Pocket to pocket. Let me just hold on to them till the end of the day. Why the hell not? When I risk, because like 1 micro is $2 every 10, right? So if we go another 300 points, that's $20 every 100. That's 60 times 2 is 120. I'll make $300. Let's make $340 just spanning DD band and DD band. Why not? Let's take a 2 micro bet on the health of the market. Sorry, but it's data, not data. Data, not data. Is it GIF or GIF? You know what I hate is that the guy that created the GIF said that it's GIF. I hate that guy more than anything for saying that. I don't care if he created it. It's GIF. Sup? Sup? What's up, Pico? What's up, boy? Ooh. Breakfast. Oh my god. Huh? Look.
See it?
Nickel. What you got? Is that breakfast? Oh yeah.
Waffles, sausages and fluffy eggs with syrup that you can dip in because I don't want your thing to get soggy.
Soggy, no. Pickle. How you guys doing? Look, check him out. I'll just. Oh wait, I'm not gonna hold
Don't
it up too
show
much.
him.
Okay.
Don't show them.
Oh no, I want to look. Oh, it's a dog.
I don't know.
His surgery
He said
scar.
YouTube is.
Oh no, his.
Crankier.
I'm just looking to make sure it's healing really well.
Yeah, it is. He's
Poor
not
boy.
liking it.
His tattoo is pretty nice.
It's green.
The little green tattoo boy.
Yeah.
What's up? You look healthy. You feeling better?
I gave him a trazodone, so he should be like tired right now.
Yeah. His little green tattoo is pretty cool. They couldn't do a skull, but that would have been nice if they did.
Eat your food. The thing is fluffy and crunchy.
Thank you. Thank you guys. Liquidity pocket. Do we? Dare I? I'm just putting micros on the LP just in case we hold. Why the hell not? Come on, NASDAQ. Give us some love today. It's just so volatile still. I hate the volatility's picking up. And I don't know really the source of it. I think that people are just super fearful of the way that tariffs could be, that they just want to be hands off instead of like taking like enormous amount of risk, you know? Like the majority of Wall Street just wants to kind of like hands off on all of this. Which makes a lot of sense, I guess. The volatility comes from the idea that the president himself is volatile, you know? That's the way I feel. Micros, don't screw me over, man. It's still trying to sell off of every pop that we get. Market hasn't picked up any good bullish momentum for a while. Like I said, I'm still erring to the bull side. Don't look too bad. Do a contest in just a second. While we're waiting, I'm going to go ahead and let me log into my Thinkorswim here. Hold up. Make sure you use the Rocket Scooter code everywhere you go. For all your prop firm needs and loves. We'll spin that wheel in about 15 minutes, 10 or 15 minutes here. Don't enter the contest unless you have posted in that tweet. Hold on one second. Get this guy front and center again. All right. Then log back in all my stuff here. Just the fact that it's trying to sell at every pop is just kind of like unnerving. People still remember this. Still trying to pop its way lower. All right, we're at the bottom. That's it. One more. 3 micros. check. I just had this for risk interval. 3 micros, baby. 39.47. That's why I had this up. I need to remember what that number was. 39.47, baby. And VIX needs to stop going higher. Come on, turn green. Turn green. I really don't understand Wall Street right now. Like, are they trying to just punish everybody that tried the long a couple days ago? Because the weird thing is the way that it's loading up right now is it's loading up for the market to move higher is what you're seeing. Like, I've seen this so many times when the market is still pushing lower and there are buyers, there are people that are loading up for the long setup. I think they're just going to make them hurt a little bit before it takes off. Oh, wait, hold on. I got to set up the bot here. Hold up. ETF. And that is now I don't know, guys. I think my computer is overheating, and I think that's what's happening because iDoc has the, I don't know, the air situation. She's working on this right now. It gets really hot upstairs and really cold downstairs, and we keep turning the air up so that she doesn't freeze to death downstairs. But I think what's happening, I touch the inside of my computer, it's blazing hot. So I think that's probably what's happening. So my computer's overheating. ETF, guys. ETF. Okay. Sorry about that. If you don't retweet the tweet, you can't win the contest. So that's it. You have to show me that you retweeted it. 3 people are going to win. If you enter the contest, hold on. Here's the tweet. So Twitter contests today. We have different rules every day, so that way people can't just come in and type ETF or come in and type in Tradeify or just show up for the contest and then leave. By far, this is the stupidest market I've ever traded. I swear, this is the dumbest thing in the world. There is nobody trading this thing. It is insane how light it is, how little it's moving. It's just blowing my mind on how nobody's touching this. Everybody is so sensitive to everything. There's no buyers stepping in. And maybe they're waiting for lower lows. I don't know, but my 4 micros are starting to do some heavy lifting here. Nasdaq's still moving 100 points. One more second. Let me log back into some of my stuff here. All right. Got to go respond to the tweet. If you enter and you didn't, you're disqualified from all future contests. Mods, remember that. If you don't have Twitter, you can't enter the contest. Sorry. Today's different. Don't forget to use our code. We're going to be giving away Rocket Scooter Lifetime pretty soon. probably once every month or so. For every $1,000 that you spend with prop firms, we're going to enter you into a drawing for a lifetime. It's $1,000 now for the next drawing. Double checking the VIX is still in an okay spot. 39.47 is that key level on VIX to kind of walk away for good. You have MySpace. What do? You automatically win if you have MySpace. I wonder what happened. I used to have a MySpace, and I used to have a MySpace Music where I used to upload all my guitar and piano music too. I don't think MySpace Music is still around, is it? I literally composed an entire piano album and uploaded it to MySpace Music a long ass time ago. Before SoundCloud was even a thing. When I was like 25. 4 micros. Doing that heavy lifting, baby. Take me to the moon, micros. Take me to the moon. I swear to God. All right. Thanks for being patient through all the technicals today, guys. It's been crazy. Crazy market, crazy computer, crazy overheating, crazy thermostat. The only thing not crazy is you guys. Y'all are the only sane, stable ones. And computer froze twice today. Overheating, I think. It did feel hot to the touch, and I think that's what's happening. Market is trying to die, but the market's still staying bullish. Nasdaq, although Nasdaq resilience is still negative, so that's actually not the best sign of the world. Insane amounts of volatility here. Unless the pop-ups are people shorting on that margin call on that 10%, and then the market's going to come down after they all cover. So basically, everybody that was short into that 10% Trump tweet, this is now day 3 of their margin calls. So maybe the market is, you know, high, staying high, so they have to cover at the high. Maybe this is people covering at the high. It does look like short squeezing after all. Not really a decent amount of long buying. But micros, do me a solid, man. Negative resilience on Nasdaq, though, kind of keeps us out of bull breakout territory. Negative resilience means we are still resisting here, even in the liquidity pocket, but we'll see. We'll see what we get out of this. This market needs not picking up any momentum from here. Go! Go! 100-point candles still almost every minute. 4 micros, give me love. 4 micros, give me love. Give my options to play some love too. How do I manage to consistently roll and tradeify? Just whatever your biggest trade is, you have to commit to it. So if you need to make 10 grand, I know it's 9 grand for the accounts I use. But example, make it 10 grand if it was 20%. That means you need to make 2,000 per trade maximum to maintain consistency. If you make 4,000, then you just need to make 20K. Your payout window goes to the next window. You can't get payouts this round. You just have to make a longer target. So it does, I don't care. Basically what it means, I don't care about the consistency roll. I don't even care. Whatever my biggest trade is, I got to commit to it. So if it's $10,000 your target and you make a $5,000 trade, now you got to make 25,000. You just trade to 25,000. There's more money in that account, more buffer in that account. So it really doesn't hurt you, just keeps you in the game longer. And as long as you don't scale your risk like too crazy after that, you should be fine. That makes sense. You know, keep your risk the same. Come on, micros. Do daddy proud. Hit that LP. LPs are not resistance targets when DD is less than half. LP is a support target. Let's hit LP and run. LP and run. Come on, micros. Do that heavy lifting today. Come on. Let's hit 600. Do I see double whammy? Don't sell off a second time. Come on, be bullish today, baby. Let's see 600. Show me 600. Hopefully there's your LP now. Come on. Push. Don't be stupid, market. Don't give me a red candle that just nukes everything today. Make the push. Transition out. Monthly maps are bullish. VIX pull back. Bottom DD band hold. What do I know? I have the worst luck in the world. It's not going to work out. Rocket scooter, though. Showing me it's stable. Okay, not anymore. Never mind. We must have some stocks that are in IPs then. And what's happening? Who is an IP? As we go up, DD band comes down. Not NVIDIA. Let's search on the scanner. All right, let's do the drawing in a little bit, guys. Thanks for tuning in. Thanks for staying here, by the way. A significant amount of stocks are in IPs. 100 stocks. So that'd be why. What sucks about IPs is that when you have a huge amount of stocks in an illiquidity pocket, when the stocks go up, the DD ratio goes down, and that's the bad part. Come on, show me 600 with micros. That's funny. Come on, baby. Dude, this is crazy. This movement's nice. Come on, give me that big green ups. Big green ups. Let's go. Come on. There is just no liquidity here, and it's insane. My eyes are like strictly on the VIX right now. Watching this go up to 300, down this, like I'm up and down $600 with 4 freaking micros. Believe it or not. It's IP, so that's what it is. Well, stocks are stuck in, and they've been thrust in the bear zone. I mean, into bull zones. They got bear zone resistance on top of it. So illiquidity pockets means the market's going to run in very strong pushes. Oh my God. Let's run it. Come on. Now just fundamentally, are you bullish or bearish? That's all that matters. What do you feel for the day? All right, let's spin the wheel. You must, to enter today's contest, different than the other contests we do, you must have participated in this Twitter post here. You must retweet. You must post in there. You must sub to the channel. You must follow me on Twitter. You must do all of that. Today's winners will have to prove that they did all of that. Come on, let's get a big old breakout candle here, baby. Come on. I wanted 600. I'll take it. Okay. I just wanted that entire retrace back up to there. I bought 2, I threw in 2 more, and then I traded it right back to the middle, just playing the volatility in the range. Nasdaq resilience is still negative, so this might be resistance in here. It's going to have a hard time breaking out of that. And we'll see. Sounds like Jägermeister. Please, God, like Victor, win for once. All right, we're going to spin the wheel. We're going to spin that wheel. We'll spin that wheel, baby. Where's my glasses? All you need and all you own. The hedge pressure resilience. Support in the bull zone. Everything rocket scooter. All you need and all you own. Rocket scooter. Rocket scooter's the best. ETF. To win, you'll have to prove that you participated in the tweet, reshared the tweet, posted in the tweet, etc., 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 etc. All the rules are in the tweet. ETF. There's the tweet. If you don't have Twitter, you can't enter the contest today. It's okay. We're not going to always do the Twitter thing. Trying something new today. You heard the song. We're the best. Christopher Cortez. All right, next. This is for ETF. I think Fast Tracks. I'll let you guys know after the content. I gotta look it up. You're gonna send me a message in Discord. I'm gonna hook you up with the account. Congratulations. I still can't see these damn glasses. Cam Haynes. Congrats. Now you have to type something in chat. You have 1 minute, sir, to type something in chat. Oh no, Cam's not. Oh, there he goes. Good job. All right, one more. Free Elite Trader funding accounts. We do giveaways every single day on the stream. Every single day. More giveaways than anybody else. We get more accounts than anybody else to give away. We get more discounts than anyone else. We're seen as like the A+ vendor for a lot of these prop firms. They love us. Eva Trades, congrats. You won something as well, I think, previously. Free prop accounts. Think I'll buy some support? Is that what it says? I've never like fully listened to the lyrics to try to appreciate what it's telling me. Woo! You bet. What's in my eye? Eva. Here's the tweet. Looks like Eva's not here. There's the tweet. Forfeited the contest. One more. You got to be here. Send me a message in Discord, Cam. I'll post the instructions after this. Pivon or Pivon or Pivon. 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 Is that you? Your name doesn't even come up. It's random. You mean it? You didn't see it on the list when it swirled around? That's the bot. I don't know. It should be there. I'll see if it's there. Pivon. Pivon. Okay, then type it again. Hold on. It doesn't show all the names, but they're there. Okay. Pivon. Didn't say anything. Okay, hold on. Let me see if your name is there. Hold on. Yeah, bro. Look. Here's your name on the list. Get touched. Pivon. Oh, he's it. He did. He's here. Congrats. All right, cool. Bro, appreciate you. Good job. Bull market. Let's go. Bull market. Did I say bear market today? I did not. All the signs are bullish again. I like it here. I like it here. Oh, wait, hold on. Let's have a position open. Let me close that out. Okay, finally. Now I'm done. Shit. I'm all getting carried away with the contest here. All right, final tally today. Final tally today. Did I have another 10K day? I'm too lazy to add it up, but we'll see. How much did I make today? For me. Oh, that's terrible rhyming. Whatever that is, it's pretty decent. 3, 52, 62, 69, 79, 85, 95, 9,600 bucks. Whee! Close. Close. Dude, I'm on a fucking crazy winning streak. This whole month, I lost one, the very first day of the month I lost. That's it. 9,600 profit. 96 on the road to 100K with Tradeify. I'm going to be Tradeify's top trader. This is the rule. I'm going to be #1 on their leaderboards, everything. That's what I want to do. Okay, guys who won the contest, congrats. We do contests every single day. Do me a favor. I'm going to send you on a scavenger hunt right now. Do the following. #1, go here. Everybody go here, because you're going to have to do this anyways if you win the contest. Might as well do it today. Step 1, go to Discord. #2, send me a message. A screenshot of your entry. The 3 winners, I repeat. And if you didn't hear the instructions, and you're not here for the instructions, you also forfeit the tournament. Go to my Discord, click the link. Send me a message, or send me a friend request, or send Slacks a message. Just send me a message, but you got to come to me. Send me the screenshot of what you posted in the Twitter. And now let's go to Twitter and see all the awesome memes you guys wrote. This is for Elite Trader Funding, 50K. Thank you guys, Elite Trader Funding. We love that you guys donate every Friday. 50K one-step eval accounts. ETF donates 12 accounts to give away every single month. We really appreciate that. Friends in ETF have always been friends of the Rocket Scooter stream. They've always, even before ETF was a thing, most people that work there used to kind of hang out here all the time. One of their mods is one of our mods a long time ago. Before he decided to move to an actual paying gig, which I don't blame him for. I was paying him 0. And they've been crushing it over there. We like those guys. Pretty nice. Thank you very much. All right, moving forward. Send me a message. Now let's see all the funny shit you guys wrote, because I want to see. Y'all write some crazy shit. All right. Hold on. Wait. Is that Jim Cramer? The first one, Yoda post the cool kid with Jim Cramer. Oh, that's so funny. The cool kid meme. All right, short squeeze mania. We like the stock. Jim Cramer. Matt. Oh, that's funny. Evan with the "you're not the father" meme. Okay, that'll work. Sonks go up. iDoc walking into the studio every day. Oh, that's funny. There we go. Let's make this bigger. Hold on. Is this Bill? No, is this Alex Trebek with no pants on? Was this a real thing? This is iDoc every day walking the stream. Here's the money printer. Go Burr. Very nice. Very nice. I don't know if I should be streaming this on YouTube. I might get canceled. Whatever nasty things you guys put on my Twitter. I'm gonna scroll a little bit at a time because I don't trust any of you. You bunch of degens. There'll be some tits on here or something. He shot the market out of a tree. I love it. That's funny. Sliding into the weekend. Oh, hell yeah. Hell yeah. There we go. There we go. Oh, that's like me at every music festival. The Trump pissing on the market. That's great. Trump. Ice bucket. This is all at 4 a.m. Oh, that's funny. Snip, snap, snip, snap, snap, snip. Poor Pickles. Yep, that's a relevant joke. Where he got his vasectomy, reverse vasectomy, vasectomy, reverse vasectomy. Oh, he has his finger in his pants. Yeah, so funny. So, by the way, put me on your office trivia team. If there's ever an office trivia in your city, I'll come out and we'll win the prize every time. We'll win the bar tab. I'm like office trivia guy. Pump the market. I like that. That's a good meme. Dachshund! That's Pickle. Well, it looks like Pickle. When the market goes, yeah. He looks at me like, what the heck? Yeah, dachshunds are so expressive with their eyes. You can see the white part of their eyes very well. Oh, yeah. Somebody gave me the... Oh, God. Blech! Arby's is delicious, I'm sure. It just looks gross. See, it looks like something from an alien movie. I'm not making this up. Go, go, go. That's funny. That one's pretty cool too. Puking out the candles. Excellent. '80s okay GIF. Somebody posted a link. There we go. That's a good one. Dude, this is triggering my vertigo. Crazy. Is he gonna do the thing? Nope. He didn't do the... He didn't do the thing with his hands. He's so funny. I love his Instagram. I don't even know the meaning behind this. That's definitely good. So he bangs his head on the telephone pole. I've seen this one. All these flavors and you choose to be salty. Oh, that's actually so funny. Yeah, pretty much. And then we get some spam. All right, you guys are so funny. Hilarious. Y'all made my morning. What's the market doing? Good. Bullish as ever. I like to see it. Let's check out the Webull here. Checking on the Webull. How much am I up today? %. I was at 25% at the highs earlier. So my options trade is already up 25%, which is good. It's a start, means I got a good bottom. I mean, I do got a good bottom. I've been working out. Ooh. Oh. Like an Eggos. Watch for a surprise end of the day sell-off that just kind of nukes everybody in the face. Everything looks good across the board. Signals are ideal today. The only exception is the VIX is somewhat bullish, but other than that, things are good. Very sensitive to news. But yeah, this is pretty nice. So the market is volatile enough that every bounce is a good play. Every short is a good play. Bears and bulls today both should be making out. There's no bear side resistance targets to short from up here. The ratio greater than half. The pockets are going to hold bullish. The bullish pocket 1, 2, 3, 4, 5, 6. The only time it didn't work was this one, but there was a catalyst event. Actually, it did work here to here. So every time we've achieved this liquidity pocket, it's worked with the exception of, nope, they've all worked. Look at this. Here to here once, here to here twice, here to here 3 times, here to here 4 times, 5 times, 6 times, failed once, 7 times, failed twice, 8 times, 9 times. So 1 9 and failed 2. And that's when we talk about the 90%. Two losses and 9 wins. Now you guys trust me on those odds, right? 9 wins, 2 losses. That's where your 90% comes from. It's repeated. So I tell you there's going to be days where you can make a whole living just scalping LPs, right? Down here, LP once, LP twice. Very nice. Thanks, Chris. Oh, Chris, happy birthday, dude. Awesome, awesome. Wait, it's at 99.18? Oh, I was like literally just estimating. I skipped all the 10s digits. 99.18? Wait, to get 10K? I need a few more bucks? Oh my God, what should I do? Liquidity pocket long? Let me pick an account to long off of. Watch me lose $1,000 trying to make 80 bucks. Full port YOLO long. Nine wins, 2 losses LP. Every single time LP long. Yeah, that's Spice. Spice is actually here. Give me 100. Let me get 10K, motherfucker. Did I get it? Did I get it? I got 80 bucks. How about now? Hold on, mate. The account in question, 1640 is now 1754. $94. I did it. I did it. I did it. I did it. I think that's 10K. Okay. Give me the $80. Pocket to pocket, that's 10 wins and 2 losses. You guys understand how liquidity pockets are so strong? So strong. That would be 10 and 2. So when we tell people roughly 90% of the time, liquidity pocket trades are golden under ideal conditions. Ideal conditions all day today. Ideal. Greater market, all 3 bullish. VIX not in the best spot to be super ideal, but everything else is good. No irrational signals, nothing. 10 times it won, 2 times it didn't. So liquidity pocket scalp all day long is bread and butter. Same as fair value gap. Oh, no. That's all candle theory. This is next level. What we do is absolutely next level here. We can actually find liquidity from options. 10,000 times more accurate. The setup is a 90% win rate. I'm just showing it to you right now. Trading from here to here, here to here, here to here, here to here. I mean, all day long. And then there to there and there to there. A liquidity pocket exists between a bear and a bull zone. These are just derived from options. It's nothing to do with candles. So we don't use any candle theory, any technical analysis, whatever. This trade right here, LP. This trade right here, LP. All day long, I will scalp from there to there. This is 10 points S&P, 10 points. They're accelerants to the bull side. Anytime you approach it, it pops to the other side. 90% of the time under ideal conditions, and today's conditions are ideal for it. That is good. That is good. Everything's good. These are good. Today's the ideal setup. If you didn't make 10K today, you are not being brave enough when the signals are good. Is that 10K? You're digging it, Lynn? Oh, awesome. Okay. So liquidity pocket is where bulls and bears are in close proximity. Liquid markets don't crash when you enter them. The market tends to move to the other side fairly often. This trade is very valuable. Often it does play. Now, if you're to make a bet inside of a liquidity pocket, what the sum of the stocks are doing, this is the market cap weighted sum of the stocks, percentage that are bullish. 62% are bullish. So the market is more likely to pop and rally from here than it is to sell off. Hold on, what am I trying to look up? 10,032, I did it! Yes, we have a course. Actually, our course is the most impressive part of what we do because our course is extremely cost affordable for people. This is the link for it. You guys want to see what our course is about? I'll show you. Give me a quick plug for this. Let me show you guys some reviews really quick and show you what it is we do here. Trust me, you're going to want to stay here for the next 30 seconds. People call this like a game changer, life-changing, completely different than anything that's out there. I mean, completely different. Best thing on the internet, whole different method. Can't recommend this enough. These are all customers that bought the thing. This shows that they bought the thing. Absolutely nothing like this. You will not find this anywhere. Nothing like this. Been member forever. Joined in July. Have been profitable ever since. Again, these are, I don't tell people to write reviews that are good or bad. People write honest reviews. And it's 5-star, 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 5-star. And guess what? It's only $1,999. No, I'm just kidding. It's $20 for 20 days. It's $1 a day because I want to practically give it away for free. So, $20 supports the salary of the 2 employees who make the content for you guys, edit the videos, make the handouts, etc. So every day, every course is $1. That's it, and it's very substantial, and it's the best thing we do. The stream is fun and crazy and goofy. Yeah, we have a good time here, but in the mornings, it's a little different than the afternoons. The afternoon's very serious. As a matter of fact, yesterday, VIX had a risk interval break, and I asked people who was trading. 2 days ago, I asked people, and I told people, you know, don't be gambling. And yesterday, I asked somebody, we have an automatic sit-out rule that we teach. Somebody said something along the lines of they were trading when we have an automatic sit-out rule. So in the middle of the boot camp, I told them to get the fuck out of my community, and I refunded them their money, and they were very angry. But I said, I don't train gamblers here. And everyone perks up and understands there's an automatic sit-out rule. Automatic sit-out rule. It's different than any other course out there, but I'm training you to be a shark in the shark tank. Not going to sit here and gamble and be silly. There's a strategy, there's a methodology, but more along the lines of what we teach is restraint. Active restraint in the market is very, very, very important to profitable win rate. Not always trying to make a trade, seeing the market move, thinking I'm going to miss out on something. I made 10K today just scalping inside of a volatile range. I'm not out there trying to pick the direction. Majority of it was made in a bunch of bites, trading from here to here, trading from there to there. So the market was falling. I was a little nervous about this middle, so I dropped it to micros. It's all part of a methodology. Once things were lining up, we lost the DD ratio, I changed to micros. Now that we're back to bullish, I can be trading minis, right? How I know when to restrain? Well, we teach in the boot camp. Yesterday, we went over the irrational class yesterday. And I advise you guys to watch that video first if you guys are just getting into the boot camp. Irrational tells you when to automatically trade small and automatically sit out. We have certain rules that are automatic sit out rules because you can prove that the market's going to fall apart. All your fair value gaps and all your technical analysis is not going to work. One of the rules is this line right here. If I catch you trading when VIX is above this line today, 39.47, I will remove your privileges from Rocket Scooter forever because I can't help you further, and I'm going to waste my time on anybody that doesn't want to help themselves. It's a simple rule. That rule saves people's lives, and that rule saved everybody's lives if you sat out the last 2 or 3 days. I was trading micros on the stream yesterday just to trade something so y'all wouldn't be bored. Rocket Scooter is, technically speaking, 9 years old, but we've evolved. Rocket Scooter launched in 2020, late 2022. So it's roughly almost 3 years old. Platform. How many contracts did I trade to move the market? For you to move the market, you need to trade at least 1,000 to 2,000 contracts. move the market. Historically, that's what you kind of see move the market. Ali's been here for like 6 years. Yeah, it's been a while, man. What is VIX risk interval? When a risk interval has to do with the margining of the contract. If you move a certain distance, the market has lost control. And when VIX loses control of itself, then the S&P has lost control of itself exponentially. The S&P options market's falling apart. And the market will be absolutely, incredibly, uncontrollably volatile. Let me show you guys what this means. And again, the sit-out rules are designed to teach everybody to be on the same page. And the idea is that you don't make money in the stock market by predicting the direction. Don't let any stock guru tell you otherwise. You make money in the stock market by finding an edge and finding an opportunity and taking it. You'll be the first one in. You got to trust that your system is right, and you're going to be the first one in, and you're going to be out when all the newbies are trying to get in. Last night, we moved that distance on VIX, even in the overnight. We broke through that and came back down. And then right when we opened, a little bit in on the stream, we were already violating that distance. So anybody that's trading when volatility is like this, you see what happens? Whenever VIX moves past a certain distance, now our algorithm will tell you what that distance is every day. The table down here will give you that number every single day. $5.60 on the VIX, okay? So this is $5.60 off of the low. When you break through this level, every day it changes, but the level is from the bottom to that distance right here, 10:20 in the morning. Look at what the S&P did right after that happens. I can prove to you the market falls apart at exactly that moment. It's a cool thing. The reason they margin those contracts that way is for that very thing. So was it 10:20 in the morning? So if people don't want to follow the rules, I'm not going to let them gamble. And there's a lot of serious people. We produce, I think, more winning traders than any other group that teaches trading. And I don't try to make it a course that makes us money either. I try to make it as free as possible. I don't make any money off the course. I do it for the love of the game. I only pay the salary of the two people. $20 is not going to put money in my pocket. Here you go. So at 10:20 in the morning, 10:20, right here, exactly here, the market fell apart. And you can see how it falls apart because you can come in here and draw some trend lines, and you can see how the market moves in like a linear fashion. And this is how you know the market's falling apart. Look at these nice, beautiful trend lines. Do we see that? Bouncy, 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 bouncy. And then the minute you break through, when VIX falls apart, the S&P falls apart exponentially. How do you know exponential? Curvature. Does everyone see the curvature? Tell me you see the curvature. I have an indicator that teaches you that the market is going to have its volatility widen. And therefore, when the VVIX is going up, it's guaranteed VVIX is going up. The VIX is widening at that point. So the SPX is finding liquidity in an exponential fashion. It has to move lower and lower and lower each time. You see the curvature? Right there. Oh, sorry, Rahul, there's no more contest. The contest is over, my bad. Come back tomorrow, though. We do them every day. Free prop accounts. Everybody see the curvature right here? Do we see that? Tell me y'all see that first. Whenever VIX breaks that level, the S&P is going to fall apart. So no bag holding inside of here. Everyone, yes? Yes, you see it? So the minute you lose structure on the VIX, the S&P falls. It's impossible to trade. So one of you could say, well, maybe I can short this, but okay, good luck, right? Get in and blow up your account. The market moves 200 points in either direction on the S&P. 4%. Not worth anyone's time, right? So the strategic avoidance is part of this, right? When the VIX falls apart, the S&P just, look at this, buy the dip, got crushed. Buy that high, got crushed. Chase that candle, got crushed. The market goes 550.10 to 52.40, up 30 points, buy it, down 30, up 40, down 100, up 50, down 50, up 100. You can't trade this. There's no structure here. There's no technical analysis requires a linear movement in the price. This is chaos, and so we can prove chaos is happening. Okay? We can prove it. So in that mode, you stay out of the market. And while you did see me slinging some micros at the start of the day, once they broke through that, I wasn't really doing anything else. I just kind of watched it, right? And so today, the question is, do we have that same amount of curvature and craziness? We actually don't. Today, the market's very stable. We're on the edge with that VIX indicator, but VVIX should, technically be speaking, not going up. It should be coming down as of the reversal, which it is. which is good. And then, of course, VIX itself is contained. So when VIX is contained below here, the VVIX itself comes down, which is the volatility of the VIX. So in an ideal sense in the market, you want the volatility of the VIX to be in decline, which will happen day after day after day. It will be lower as long as VIX doesn't breach this level. If VIX breaks this level again, the market is thrust back into its crazy pandemonium. And so one of our automatic sit-out rules is when you move this distance, stay out of the way, because you don't want to play with the S&P falling lower and lower and lower. It moves so crazily that you're going to blow up pretty easily. Now, again, liquidity pockets, right? Perfect setup. Liquid markets don't crash. Anybody here trying to short this market today? Anybody? Any of you kids trying to short this today? LOL. John's like LOL. I'll short this today. Is it from the low? Moro, it's the low of the session. It's a travel distance of the VIX. It's not a distance from the lower high. I mean, this is open or close. It's from the low of the session in a single Globex session. Now, if you short at the high, that's a smart trade. I mean, like, as the market's falling. Did any of you guys, as the market's selling off, try to chase a short and get in on it? If you shorted off the technical highs, it's very smart. Did anybody chase a short and are getting squeezed right now? No, I won't kick you out for shorting. But in the Discord, I'm very strict, and that's why people, I think our program's kind of going viral. People understand that it's not a cash grab for the Rodka Scooter crew. I wouldn't be kicking people out and giving them their money back if I didn't care about your success. I know I pretend like I don't care about your success, but I do. If I have some loser gambler that's in my room and paying me money, I could be easily capitalizing off their failure, asking for more money. Don't worry, bro, I'll train you. Give me more money. Hey, man, don't forget to use my affiliate code. I can make a fortune off of a loser trader that gambles. Off both their affiliate code use and their continual use of my product. If they show me that they're a fucking idiot, I kick them out and give them their money back. I don't want to I don't want to hang out with people that don't want to learn trading. That shows you I'm just doing this because I love doing this. That makes me different. I really do care, like, a lot about this, the stability and health of the group. I want people to, like, be inspired to do silly things. Market takes people's lives away. It's really bad. It ruins things. And in this world, there's not a lot of people that care about you. It's a Shark Tank, dude, and people here are ready to steal every penny you got. So, but that's it. Shorting the high is still dangerous after 2 days ago of Trump tweet. Yeah, I'm thinking St. M's is right, because, like, for me, any news that can come out from now is a variable, right? More tariffs, less tariffs. Fed raise rates, Fed not raise rates, Fed cut rates, whatever. There's a million things that can happen. Maybe not raising rates, but when are the Fed cutting rates? What's the next Trump tweet? I've already secured my options position on the long side. I'm going to log in lower. I'm putting 20K in every time it hits a low. Every 3% lower the market goes against the lows, I'm putting 20K all the way down into S&P. Let me show them liquidity maps. Monthly maps where my target is. So we've come back to bullish monthly map, which is great. I've got liquidity pockets all down here. Remember we talk about liquidity pockets and liquid markets don't crash. All things being equal, the market is planning on 490 being a bottom. Does everybody see this? Maybe 480 at the lowest. 480, 490. This is the bottom. So the market has now planned and structured itself for this to be the bottom. As long as everything stays the same, it's the bottom. New news, it won't be the bottom. How do you respond to the tweet? It's too late. We've already had the contest. Y'all know I care. I try to care. What is 30-second pitch for your course? What is covered? So let me get through it. So in our trading course, we go over the 3 basic tenets of successful, profitable trading. And again, it's not what you guys think. It's not like these are the 3 indicators that make you successful. Number 1 is trend identification. How to identify if the market's going up or going down. We have 3 indicators called greater market, which allow you to do that. This is one of them. Actually, we have 3 indicators that tell you trend identification. Is the market bullish or bearish? Today, we are clearly in a bull market from the open. Number 2 is risk and position management, position size, sizing correctly. Normally, you bet too big for the risk you're taking, and you tend to blow up. Normally, your trading account goes up like this, and you lose it all in a day. Not here. You haven't seen me blown up once on stream in, I don't know, 5 years since I've been streaming. It never happens because it's proper position sizing. I'm never in a position to blow up, even if news comes out against me. I always seem to avoid it or have a small enough position not to be affected by it. That is the key to a high win rate. A high profitability on the trades you make is positioning the right way, the right size, where to get in, where to get out, where to average in, where to close, where to set a stop, how to take multiple trades in tandem, all kind of position sizing tricks. And the last thing is strategic market avoidance, which we already talked about. There are certain times you can prove the market structure breaks, and then everything that you'll ever use that tries to predict some kind of structure, moving averages, VWAPs, volume profiles, will fail when structure is broken. The market's in chaos. Nobody's out there looking for technical lows and highs to buy. People are rushing around to avoid margin calls. There's no thought process. It's panic. So when they're panicking, you're safe on the sidelines. Don't play in the market panic. And that is the key to a high win rate. How do I have 70% win rate in this environment? Strategic market avoidance. Literally. That is the trick. That's literally the trick. So trend identification, position sizing, and then strategic avoidance. Now, the trick in position sizing is the majority of our courses. We teach you the indicators and tools, but after that, it mostly is scenarios and choice making. How big to bet and why you bet. Picking the trend is not hard. Betting right under the right conditions. So essentially, it's a sliding scale, if you may. It's card counting for trading. Under certain types of risk, you're going to bet small. Certain types of risk, you'll bet big. Basically it. So imagine you go to like Vegas this way. So let me teach you a course on poker. And then all of it's like, this is a royal flush. This is this. This is this. This is the hand that beats that. And you're learning about poker, but not teaching you how to play poker. A course in playing poker, or actually blackjack. A course in playing blackjack is going to be, these are the odds. When you get this card, this is the odd. This is how big you bet. If you see this card and you see that card over there, and this guy's at that card, then you change your bet this way. This is when you split. This is when you double down. This is when you don't. Things like that. It's a strategic course in betting. So that's really what makes it different. It's not a chart reading course. Chart reading never got anybody anywhere. All this stuff, doesn't matter what you use. Bookmap, ICT, any of this stuff. That stuff never made a profitable trader. The risk management side and knowing when to sit out is what makes you profitable. The two things you actually aren't doing, probably. If you don't have a strategic sit out strategy, you're missing out on what makes a pro a pro. Knowing when to avoid the market. Like I can prove the market's in chaos right now. I can prove the S&P is going to curve lower and lower and lower, and I can't find out where that knife's going to stop falling. But I know it's falling. I know the difference between a falling knife and a dip to buy. Today wasn't a falling knife. Everything was nice and clean. I bought this dip 2 times today. Yesterday, I didn't buy that dip, did I? There's a difference. The Michigan numbers today, they came out. The inflation expectations are high, I think, but they're still factoring in the tariffs. But the rest of the reports actually looked very good. The expectations were decent. Where's my little, hold on. I don't know, John, what do you think, dude? Because it didn't look too bad to me when I looked at it. Of course, the inflation numbers are going to be expected to be high, but the 1-year inflation was 6.7, the 5 years 4.4, but they do modify their, they correct their report every 2 weeks. So I'm sure next correction in 2 weeks is going to include not having those tariffs everywhere. They're going to include the tariff policy. I think this report came out too late. If they're expecting 7% on the 1-year inflation, I think that's including tariffs, right? So I feel like these numbers don't reflect today. These numbers reflected like Tuesday, right? And then Liam just said, legit just labeled you in a nutshell, trying to work on risk management. So risk management's hard to work on because people just use that word and it's hard to understand what it even means. I hear traders that like write this feel good shit all over the time. Yeah, all you need is risk management. Bro, just use risk management. And you can be like, oh, he's right. Gee golly, I should use risk management tomorrow. That's my problem. Well, I'm starting using risk management starting now. Okay, and you sit there at your computer and you go, Risk management. Risk management. What the fuck do I even do? So what is risk management, right? We actually give you rules. Don't do this, do this, don't do this, do this only when this happens. When this happens, trade very small. When this happens, sit out. Like, it's literally like risk management is a guideline. It's like a checklist of things. So that's different. We still have over $1 trillion worth of tariffs. It's not a real pause. And that is kind of like the hesitation of this market to rally. So the bull bet that I'm making and other people are betting is that they're going to work something out. Trump and China will work something out. They did last time, or they paused it. They're probably going to work something out in that stalemate. So anyways, consumer sentiment numbers, John. Yeah, I think these are affecting the inflation. I don't know. This is obviously there's tariffs still in play, but are all the tariffs still accounted for here? I don't know. But the sentiment and the conditions and the expectations, the numbers came down. So it's not really that good in general. The consumer expectations are just down and down and down and down and down. It's like it was in the 2022 recession as well. The numbers have been pretty gnarly. Even during COVID was like this as well. So we're pulling back on that. Not the best. The consumer sentiment is at 50 and the current conditions is at 56. Actually, why did I think it was good? Oh, I'm sorry. The PPI was good. The Michigan numbers were bad. My bad. I was like, I remember them being good today. It was the PPIs were good. They were all down, the PPI. So 3.3, 2.7. The change in March was down 0.4%. This was good. PPIs across the board came good. Core was good. The discretionary items were good. Everything was good on PPI front. Michigan number is a little kind of meh. And so I think that like maybe they may have different valuations on like the tariffs effect on things, but the 1-year inflation popped. Consumer expectations lower. We already showed that one. Current conditions lower. Looking bad, but you know, Trump just has to push a button to fix all of that. We'll see. It's hard to say because remember, they do these surveys at a certain point in time, and between then and now, the news has drastically changed. So it's like, was that survey done yesterday or today, or was it done like last week, right? So it's hard to kind of say that they may be off sync with the actual conditions. Like next week can be a very dramatic shift in those numbers. Probably. How's the market today? It's bullish as hell, man. It's all bull signs. Everything's good. Is this the indicator we use on TradingView? Right. We have a version of TradingView, a special version that's TradingView on crack. The indicator is available in our version of TradingView. So you can get it from the website. Swervy, you've been sleeping all day, man? Why you been sleeping? Market looking solid today. Checking my options position today. $22%. And I got 5 weeks to make money on this trade. Ooh. I love it. So basically, I'll give you guys a hint. I don't tell people about what I'm buying and what expiration I'm buying, but I'll give you a hint. It's 5 weeks out. That's it. It's shorter than I normally do. 5 weeks. Yeah. I'm giving the market 5 weeks to rally. I'm being aggressive on this because I don't want a 10%. Like last time I called the bottom in October 2022, I made 10 and 12%. Sorry, 1,000 and 1,200% run-ups on my options buying the bottom. I'm not going for 10x this time. I'm going for 20. 15 to 20. I'm being hyper aggressive on this. Putting all the hints together. 5 weeks, but as the market falls and if we lose lower lows, right? If we lose those liquidity pockets, I'm going to move the trade out another month. So again, every time you break a lower low, just assume you got another month of dirtiness. So I'm assuming that if this is the low, as the market falls 3% every day, I'm going to throw 20K more at the market. Every 3% we fall. And if we break lows, I'm just going to sell the options at a loss and then scoot them out another month. Yeah. That's only possible with Mag 7 names? Well, yeah, I'm not going to be out there buying options in fucking Pfizer or Boeing. How big is my options trade? I will be adding 20K and 20K and 20K and 20K as the market's falling until it stops falling. So it's going to be as big as it gets. I have no plan on stopping putting money into it. I hope the market falls because I'd like to make $5 million instead of 1. But we'll see. How big is it? So it'll probably be a couple hundred G. If the market rallies from here, though, it'll be a smaller gain, but it'll be something. If it doesn't fall, still adding. That's the thing. If it doesn't fall, then I get to technically trade with the options. At that point, if it just rallies up, then on days that we do sell off on bad news, I can readjust my position. But the thing is I'm not chasing on the long side. In a news-driven market, you should never add risk to the table. Whenever you're winning, you should always take risk off when you're winning and add risk when the market goes against your sentiment temporarily. Trump can tweet something and then I'm all in at the top and losing. I don't want to add as the market's going up. I save my capital to add to cost average in as the market goes down. Bill Ackman's comment against zero DTEs and leverage ETFs. I didn't see it. What did he say? Bill Ackman's always against everything. He's got... How big is my actual futures trading account? I don't ever keep any more than I keep 50 to 100K I keep in there. I don't need a lot to trade with, and I always just take out whatever I make every month. I never keep it. I don't let it fall below 50. I don't let it get above 100. When I was younger and more stupid, I would keep 7 figures in that trading account, but it only enticed me to gamble with it. You remove it from the trading account once you make it. Why not sell puts and keep the K? Well, yeah, I mean, you're right. It's just a more expensive way to long the market. If you do get assigned. It's taking the same risk of just longing. I mean, you can sell puts. John's not a bad strategy either. I'm not good at the wheel strategy. Am I LLC or S Corp? I'm a C Corp. Have I ever lost big money? Oh, yeah. Back in the day, when you guys used to watch me trade my trading account when it was bigger and I was younger and more stupid, I would have 6-figure days on stream, up and down. In my Tradeovate account. How do I identify the market as bullish or bearish for the day? We have 3 indicators that we look at for trend identification. One of them is this ratio. That number is greater than half. Check. The stocks are bullish. Just say the stocks are bullish. Number 2, SPY. If SPY ETF is above this orange line, then you can say that all indices are bullish for the month period. So SPY has reclaimed a strong bull support. An example, today, if the market was to just crash out today and fall to there, at the end of the day, that's where I would long more of my options on the bigger monthly place, and I'm playing a month out. Number 3 is the monthly map, which is looking 3 months into the future to look at the distribution of options risk. So in a nutshell, when the bottom of this gray zone is slipping down, it's bullish, and the top of this light gray zone is slipping down, the bears are squeezing. We have thrust ourselves today back into a bull market. And the market's taken 2 or 3 days to digest that, but as you see, the market's trying to sell off and everyone's buying the dip this morning, right? So as long as no changes happen, Wall Street and the insiders of Wall Street are pricing in the last week's low as the low. He blamed some of the recent behavior on them and implied they give to value to society. Interesting. I would say that like shorter term options cause a lot of unusual order flow, more so than they used to. The market's more sensitive because of them. Imagine speculative 0-day options. Somebody buys for 15 cents and they close at $4. You know what I'm saying? People getting like 10 and 15, 20,000% moves in options trades. Yeah, that's the wins for today. It's 10,000 today. I've been on one hell of a winning streak, guys. This is like my fourth 5-figure day. So, it's been good, man. I do have a meeting in 30 minutes to go yell at people and fire somebody, so wish me luck. Maybe I'm gonna have to get new data providers. I'm in the stream and I go to person A and they're like, well, it's person B's fault. I go to person B, they're like, well, it's person A's fault. And I'm like, and then person A is like, well, that's the data feed's fault. And data feed's like, no, it's one of y'all's fault. And then I got 3 people doing this and nobody doing shit. So I'm gonna hire somebody that's gonna do shit and then take like these cats that are running around and herd them into a single unified force. Because so far I'm on the stream and I'm the one still having to manage everything when I need to be hanging out with you guys trading. I don't have time to. It's kind of hard to run a tech company and stream at the same time. So I need to hire somebody that's going to do it for me. I'll fire them in a nice way. Whoever's at fault, I'm going to give them one opportunity to no longer be at fault. And on next offense, I'm going to replace them with somebody that I'll pay twice as much to do the job twice as well. And I'm going to let everybody in the meeting know. Whoever gets fired, the next person I hire, I'll pay twice as much. So don't get fired. The first person to take ownership gets a promotion. That's normally what I do, but don't spoil the surprise. It's not anybody trying to hide their fault. It's incompetency somewhere. Somebody's not competent enough to understand the problem. I'd like to err to the side that's the data providers. My engineers are very competent. The last time we had this debacle back in 2020, John, you remember, is the data feed providers. We almost sued them over this. And they changed their infrastructure because of us. The Rocket Scooter name came out of it. So somebody is missing something. Nobody's like, it's my fault, but I don't want to take responsibility. Somebody is not seeing that it is their problem. And so it's a competency thing. I need to have somebody at this stage of the game, we need to have somebody in place at that position who's competent enough to understand something that's hyper complex. This project's complex enough, but we need like the best of the best level of genius. So is my main source of income something other than futures trading now? I've got 16 streams of income. 16. Rocket Scooter employs 20 people. Now I'm counting each affiliate stream as a separate stream, but I patched together a pretty decent living. Futures trading is a bonus. Like the money I make from futures trading just gets reinvested in the stuff. All right, Victor now. I'm looking for a project manager. We might need one. We need like a competency in trading platforms, as well as have enough knowledge of our code stack to kind of at least make the discussion happen between all the engineers. And our engineers are global. So we've got people up north in the United States. We got people in London. We got people in India. So you got to tie 3 different, that's the challenge we have, is because our engineers are spread out all over the world. We have to kind of like bridge everyone together. So the timing issue is kind of one of the hardest parts to coordinate. You need 5 more streams? I put you on? Okay. Ali, you gotta start streaming, dude. You start your own futures trading stream, man. Take a look at Discord. What should we look at? What's going on? People say take a look at Discord. What do you want me to look at? Oh, you sent me a message, Ricky? Okay. Oh, cool, man. Yeah. We should chat. After this meeting, we're going to come out with something. If I have to let go of the data providers or we have to do new data infrastructure, we're going to have to figure out what project we need to install, whatever data congests. The problem is the APIs are congesting, and we don't understand why. And it's all 3 of these people's jobs to understand why, and nobody seems to understand why. So somebody needs to figure out. And it could just be a state of the infrastructure just overwhelmed by the chaos in the market. This is something that does happen. And it might just cure once market activity comes back down to a normal level. So the problem comes down to what most technology firms in the space do is they have a question. Should we update our infrastructure and pay a whole lot of money to build this project for something that happens twice a decade? Or we just let kind of things be bad for like the week that they're bad and they get back to normal? So right now, what I firmly believe is that the overwhelming amount of requests that are going through the pipelines of the data provider are starting to slow down due to congestion. As everybody's in margin calls, everybody's running their max throttle right now to kind of like balance their shit out. So it could just be something that's not fixable. Maybe that's why everybody doesn't seem to think there's a problem. It's just a traffic jam from like 10x the activity. I don't know. So we basically need a very strong scaling plan that's robust. And in this environment, it'd be nice to have our stuff working at full throttle, but how much will that cost us to change something or to rebuild something if this is just a problem that's going to go away in a week on its own? Yep, you should be able to measure it, improve it with the data, and we should be able to see. So today I got all the pieces together in the room, and we're going to talk about it. I'm like, I need to see your data. What's the traffic look like? Are you getting unusual amounts of requests? How many API calls are we sending? What's the timeout time? Like, what's going on? How long till it times out? What times out? So what's happening is our server is talking to another server. There's one server that calculates the data. It's in a lockbox over here, run by one company. And their job is to make sure the calculation integrity is perfect every day. We pull data, we send data to that calculator. It does the calculation. Then it sends the output to our server. And then you guys come in here and type in SPY. Then it goes to our server and just grabs the answer. That's it. So behind the scenes, we capture all the data, run all the calculations, and store it. What's happening is that when we're asking for, one person is saying, when we're asking for the data, it's congesting. A person on my team is saying, no, you are getting the data because we can prove it. But when we ask for the data from you, it's congesting. So everybody's like, you're the bottleneck. So today we're going to figure out what it is. Are they watching the stream? Hopefully not. No, if anybody solves a problem, I usually give out raises. I'm good like that. I'm not mean. Bull market bullish, baby. Breaking that upper DD band. Let's check out my options trade. I wish I could have put more money into it, but we're okay. 28%. Can't complain. I'm looking for thousands of percent though. Yeah, I'll reach out to some of you guys. We could be in need of a strong project manager, but obviously, you know, you need to understand the nature of the trading platform world. Basically, somebody that in the moment shit happens, I don't have to be tying the pieces of the team together. Somebody to just coordinate. And it's kind of like a part-time gig too. Because I really just need a project manager to work sporadically to guide the projects and manage it. But I mean, full-time or part-time would be like managing, because I am the project manager, but boy, I'm getting so busy. I like someone else to do it. Renfrew, yes, it does. The 20-day program goes through all the things that we talk about and use. If you join monthly, you have access to read everything correct. And if you join monthly, the courses are free too. So that's the best part about them. JODS had worked previously. That'd be kind of cool if you guys want to help out. If I want to pay your engineering salary, yeah. But the problem only started happening once the market started falling the circuit breakers. So you got to kind of think about that as being a potential cause of this, right? Clearly, there's a smoking gun, is that the market is plunging in absolute chaos. My trading view, Trade wasn't even executing orders when I pushed the button. and that madness, right? So you can understand with the flurry of volume, you know, one of the highest traded volume days in history, I think. You know, clearly that implies, you know, traffic is, you know, it's like traffic at the rodeo. You know, it's 10 times as heavy. SPY crash days, they had over like almost 3.5 million shares. The only time it got worse than this was during COVID level volume. Let's see, that's ES. Sorry, look at SPY. Is this the record-breaking SPY? Nah, I didn't break COVID days. But yeah, I mean, it's almost record-breaking. We never had volume this high since COVID, and maybe that single day in January of 2022, the first day of the sell-off, this big day right here. The last day of the sell-off. So, you know, the question is the problem that we're going to face... Oh, you guys can't even see the chart at the bottom. Is the problem we're going to face just something that happens once every 5 years, right? We only started seeing the delays literally 3 days ago. It's been this day we didn't have data, this day we didn't have data, it was delayed, and this day was delayed. So right in here is when things got delayed. So there is clearly 5 times the traffic pretty much everywhere. So 5 times the traffic here, and 5 times the traffic here, and 5 times the traffic here becomes, you know, 125 times the delay. 5 times 5 times 5, that compounds on itself. So could be the issue. Does ETF have consistency rules? They do. They have like a consistency rule that means a day only counts if you make a certain minimum. And so once you make a certain minimum, if you make a bigger trade, then that minimum gets bigger of what considers a day. So you can't just flip the accounts on and off to count as a trading day. Who called that the bull market is back? Huh? 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 Who said it? Who said it? Who said it? Who said the bottom was in? I told you guys, I get this right I've got this right every time since I had monthly maps. That's it. That's it. We did it, guys. We all did it together. It was really nice. Oh, how's my option trade doing now? I know I keep looking at it. I'm looking for thousands of percent. I'm excited just to come on here and see 33%. That's good. Can't complain about that. Let's roll, baby. Liquidity pocket. Again, SPY right here. I should be trading still, but I'm kind of maxed out today. Every 10K, I'm going to take a stopping point on these accounts. Bottom in for today? No, bottom for the year. No, bottom for good. Unless news changes, the bottom is in. What's better to start off Forex and futures trading? I would always say futures if somebody asked me that question. Not year, but local bottom? No, for the year. This is it. Unless something new happens, this is it. The market's no longer selling off on tariff news. Unless things get worse, or Fed raises rates, or something changes, we will go lower. But as long as nothing changes, this was the bottom for the year. Yeah. Unless the news changes. I mean, that's how the market works. And I don't think the news is going to change. We need the Fed to say they're not going to change, not going to raise. Sorry, Fed's going to say not cutting rates this year. Okay, maybe. More tariffs, maybe. Other than those two things, I think we're good. The economy's good, market's good. No, the bottom for good. A pocket slightly lower, right? But that's not how the monthly maps doesn't tell you the market's trading down. It's telling you where the support is. So when you rally into liquidity pocket, you come in to see where the lower lows can be to show you where the support is. If the liquidity pockets as they are in this is all next week, the lows are above the lowest low. So the market has found the liquidity. So if we were to fall, it would be a double bottom, a W-shaped return. If the market were to sell off next week and fall to here, I'm doubling down on my options position next week at exactly that dip. So the idea that the market is liquid at 480 and 490 and 500 means that the market is going to find support at those levels as time goes by. That makes sense? Yeah. So this isn't taught in the boot camp though. This is like Matt's bottom picking trick. And I don't have a class on telling you guys how I pick bottoms, but I've gotten it right every single time I've done it. Whenever you move on news, you come back the next day and say, how good was that news? And you look at it and we are still trading and supporting here. Now, I know that I'm wrong. If we break below 480, then clearly the market has support a month later at 460. So the market, I know I'm wrong each day if we fall back into a bear zone. So like tomorrow, if the market sells off tomorrow, it needs to be, or Monday, it needs to be below 490 for the market to be bearish in a single day. So it's very unlikely that's going to happen. So that's why I say the bottom's in. What about recession? Nope. Zero chance we go into a recession. We already had two, like back to back. We had COVID induced a temporary recession where everybody got laid off and GDP went down and inflation went up. So it actually induced a period of stagflation for a little bit of a minute, which is the worst kind of recession. And then that cleared up after a year. And then 2022 was a fallout off of the high inflation and problems from that. And then we had a little mini recession there. We already had compiled short-term debt cycle plus the long-term from 2008. We've already done the liquidation off highs. We've already, The 2 sell-offs we've had in the last 5 years is enough for the market to be comfortable still from here. There's no evidence of a recession. Unemployment's not going up. GDP's not going down. Consumer sentiment is bad. Inflation is high. But those 2 things together never put us into a recession. You need unemployment to go with that. So until the employment situation changes, I don't bet on a recession. People are betting on a recession, but they're wrong. Things will cost slightly more, but I don't think it's gonna do anything but lean people harder into the credit market. I feel like the credit market can absorb, some things. Now, some small businesses might be affected, like people importing shit from China, probably got to pay 3 times as much for their goods, might go under. But in COVID, the same thing happened. One yoga studio went under, and then 5 more popped up. So I like to see that in the light of, I don't think it's enough to kill the economy. Now, certain people have to find new suppliers, and it might hurt for a little bit, but I think we just price that in. Whatever hurt we're going to feel, we just price it in. And the market's adequately priced that in, and it only gets better from here. That's what I feel. That's just my thought, though. Too much digital money for a recession, as somebody said. If these moves hold up, it could be nice for the overnight. Yeah, 100%. Did the Fed say they expect unemployment to hit 4.5% to 5% this year during the talk today? They did, but I don't think it's going to happen. I think companies are going to have enough free cash to adjust or take the hit themselves rather than lay people off. The stock market's trading near all-time highs. Companies have more free cash flow than they ever had before. I mean, Nvidia, we're trillions of dollars, Apple, $1 trillion. I mean, these companies have the market cap, right? And they have the extra free cash to sustain issues with tariffs. I don't think they're going to go in massive layoff sprees. I think they're going to adjust and take the free cash they have and invest in places where there's no tariffs, build factories here or whatever. And any of that change will stimulate jobs to offset the loss we take from the tariffs. So yes, current trajectory means if nothing changes, unemployment will go up. Problem is with the Fed's assessment is they don't have any foresight into what could change. Nobody does, but I'm betting that we do adjust to the tariffs. And I think that we can adjust and not have to lay people off. I just think that it's possible. Companies have a lot of cash saved up and the ability to really offset that cost over a pretty decent period of time. That's my bet. The recession call. All the firing that has happened has not caught up with the unemployment numbers. Well, that's not true because unemployment filings are weekly. There's a weekly report. Next week might show a difference, but you have unemployment filings every Thursday. The initial jobless claims are people that got fired. The continuing jobless claims are people that have been fired and can't get a job. These are non-performance related firings, right? The initial jobless claims are not showing any spikes at all. Even through the massive amounts of inflation and tariff fights and tariff bluffs and whatever, it's still stable, 220K. It's never changed. So a layoff spree like 200 is a stable and normal in a bull market. We've been there since 2022. There's no changes. And every week when you get fired and you file for unemployment, when you get fired for non-performance related reasons, you qualify for unemployment, you will literally go home that day and sign up for unemployment because you need to keep paying your bills. And the U.S. Bureau of Labor and Statistics will take that data point and you'll be in the next week's data. This isn't delayed by any more than a week. So you could be right Friday, but the thing is that we haven't seen it. And if there's firings this week, we'll see it next week in the data point. But we haven't seen anything yet. I watch this data every single day. I mean, every single time it comes out. So there's nothing there. And the continuing jobless claims are suspect, but they're still within a normal, tolerable range. We still have the same sink of people since early 2024, the same amount of people. There are more jobs being created than there are firings. It's offsetting. So as you see, you're right, as people are getting laid off, but there's more jobs being created and it's at a wash. So we're at a steady state right now, and 2 million is actually pretty normal because we actually were higher back in the 2012, 2014, 2016. There's more people on unemployment after the big market crash, 3 million. And then in 2018 and 2019, we were below 2 million like we are now. So we're back to 2018 and 2019 numbers, which is pretty nice with all things being considered. with high inflation and problems in this and problems in that, high tariffs, we haven't seemed to have any company not able to take the hit because nobody's laying people off en masse, right? So the jobless claims will be faster than those monthly unemployment numbers that you get. So the overall unemployment number you can assess would be bigger or smaller based on these micro changes in unemployment. Now, this doesn't include everybody that's got fired. This is just non-performance related reasons and people that qualify for unemployment. Not everybody qualifies for unemployment. So if you got fired for stealing chicken nuggets at McDonald's, you can't qualify for unemployment. So you wouldn't show up in that data point. But most of the companies will have unemployment insurance. So small businesses may not, but it looks good so far. Every week we look at that data. It's one of the most important data points. And we look at the JOLTS every month, and that's looking stable too. Fired, but 6 months of severance doesn't retort severance in. Yeah, that's true. It's also a limited amount of unemployment you can draw. Yeah, some companies are even talking buybacks because they have so much money to spend. My bet is the following, that Trump and China work out the tariff situation. They shake hands with a very positive deal. I'm positioned for that. I'm betting on it happening within the next 5 weeks. I think that we're near the verge of it happening. The volatility's already expanded to the final levels I thought it would be, and we're good there. Unless there's an end of the day market crash today, which could very well eat my words, as long as we don't crush through these key levels in the market, we hit the bottom, which is good. But we'll see, right? We got a whole nother week. But look at this. Big tech leading the way. QQQ is as stable as ever. There's no fear I have in this anymore. There's a liquidity pocket all inside of here. Just think of liquidity pocket as a buffer for selling. Any selling is going to have a really hard time breaking through these levels. Okay. At worst case scenario, we could have a W-shaped bottom as we test one more time, which we very much could. Bad news comes along, dip to the bottom, we should be there. Think about getting one more trade today. I don't have anything to trade off of though. Once I hit my 10K, I think I'm good. I'm pretty happy with today's performance. I want a huge winning streak, by the way. That's the last liquidity pocket. I didn't take it. So if you guys, the 90% probable liquidity pockets, we love them. 1, 2, 3, 4. This was another Arby's trade. Jesus Christ, we had 2 of them today. We need to do that class today, y'all. They call it the Arby's trade because it looks like a hamburger. There's 1. There's 2. We had 2 today. The U.S. unemployment numbers are not the initial unemployment claims. No, unemployment claims are claims to file for unemployment insurance. The U.S. unemployment numbers aren't unemployment filings. There's 2 different, the word is used, it's the same word, but they have different meanings in different places. If companies are going to lay off 10, 50, 20, 30,000 people, the jobless claims would be spiking because some of those people will have applied for unemployment insurance, right? So the number would spike if there was an unusual amount. And the amount may not be 100% of the people that got fired, but you would see somewhat of a spike in those numbers, right? The overall unemployment, you're correct, is the total number of people just without a job, right? That's different than people that are getting paid unemployment insurance from the insurance. What about MHP on futures? Yeah, I mean, a hyper bull today could buy off of that dip. Very possible. Remember, strong pivots are really good. There's a dip to buy for the move up. That also coincides with liquidity pocket. Not a terrible spot. But while some people are getting laid off, other people are finding jobs. That's what you have to see. Those unemployment numbers are going to be the bigger unemployment number we'll see. Is it changing? And we're talking like the tariffs will have to cause a situation. So what I know, because I've been fired before due to 2008 recession, right? The big financial crisis we had. I got laid off. I was in a limelight position. I was an ace at my job. I got promoted within the first year of working there. I was running the reactors at Dow Chemical at a really large limelight position a very large plant that was like a big cash cow for this company. And I was killing it. Like my unit was outperforming the last 5 engineers that worked before me. I was literally crushing it. I got awards. I created something that saved the company millions of dollars. I redesigned the flare system. I was doing all kind of fun stuff. And yet I got laid off because the other 5 engineers there were even better than me. And everybody there was crushing it at their job because they only, it was Roman Haas for Dalvadas, but Roman Haas only hired like the best of the best. So everyone there was good, and they fired me based on seniority. 3 of us got let go. 3 of them got to stay. And that was just how it happened. And then they either were going to relocate me or they gave me a severance package. They gave me a choice. So I took the money, said I want to move to Michigan, and I got laid off. I remember going through this. I should have gotten laid off, but, it happens. But I'm glad that I did because I now pick up trading and I love doing it. So the idea is what I know is that I got laid off in the summer of 2010, almost a year after the market bottomed, after the crash. So the company was in a weird spot. Let me do SPX chart here, sorry. So what happened with me was that it's like there's a delay between when, and I also as a business owner, I can attest to the same thing. As a business owner, I can tell you the same thing applies from 2 perspectives. The first one is that the hint of things being bad is not what people get laid off over. Let me show you what happened to me in my firsthand experience. Remember, I crushed it at my job. My boss was like, we couldn't pick who needs to go, but 3 of you need to go. And so we just said seniority is the most fair way to do it. And I had only been there for 2 years and everyone else had been there for 5. So I got laid off right about here. Okay. After the market had crashed, after Lehman Brothers, after Bear, after the housing market collapsed, after everything was dead, and then the market bottomed out at the beginning of 2009. And then 6 months later, the company couldn't handle it anymore and had to let me go. So what happens is the company doesn't feel the struggle yet as the market's crashing. When the market's recovering, people are at their wits' end here. And I'll tell you another example. You get laid off in the middle of the recovery. There's always a delay. Here's another example. A friend of mine owns a yoga studio. I went there for over 10 years. And in COVID, when everything shut down, they had to do yoga from home or whatever, and all the bullshit around COVID shutdowns made everybody have to close their businesses. They started struggling and never regained their numbers. And the sucky part is that COVID created problems for them. Here. And they finally closed their doors. Believe it or not, in the last class I went to was in December of 2025. The hit they took from COVID, they couldn't catch up and they finally closed the doors here. And the crazy thing about it is 8 of the people that worked there decided to pull their money together and today open a brand new yoga studio that's packed full of people. And when we went there in December, it was also packed full of people. But the problem is, if the market falls like this and you have say your bills are 20 grand a month, okay? 20 G a month, and your income goes to 2 G a month. Every month that goes by, you eat into your cash reserves until some point your cash reserves become 0. And then you're starting to struggle and build your business back, and your cash reserves are still at 0 because you're making just enough to pay the bills. But then now you were negative through this time. You accumulate a whole lot of debt. And then you're borrowing money to pay off the debt and borrowing money to pay off the debt. Your business is growing. You're borrowing money, but your business is growing. And there becomes a point to where your debt callers come in and say, you need to pay off your debt. And you're like, but I'm still growing. I need to borrow money. And your mom's like, I gave you everything I have. Your friend's like, I gave you everything I had. Your lenders are like, you've got 3 loans already. And then you're like, fuck, I'm out. And then you lay everybody off, even at the highs, right? And everybody you laid off had been saving money because they weren't holding your risk and they opened a new studio that's thriving right now, right? So the magnitude of when a business takes the hit, especially in their stocks, it takes a while for you to run out of options to where you have to fire people. Does everybody understand that? I deal with the same thing personally, right? The business takes a hit. They survive as long as they can until they get pressure from shareholders to lay people off, or they run out of free cash. They run through their cash reserves. They're in debt. Then you got to close the doors. And so if people are getting laid off now, it would be weird because companies shouldn't be laying people off right now. We're coming off of record highs. Companies have cash. They even have cash to do buybacks. I don't think big tech firms or big companies are laying people off right now in the light of there may be tariffs, right? So you have to think of it like this. If the market were like in a state of like tariffs are bad and we were to do this and do this and then do this, and then we start coming up right here, we'll probably start seeing the layoffs after it is worse for longer, and then companies run out of money. They gotta let people go. So those are the two experiences I have to let you guys know that I feel that nobody's overreacting right now, laying people off. Even a tiny yoga studio, 2 years to never catch up, or actually 5 years to never catch up. And they decided to close the doors finally. But the business was there because the same teachers opened up their own studio and the business was fine. So I live in Houston. Do I expect the spike in the dealer intermediary? Not this time around. There wasn't enough selling. But sometimes when you get reversals, you just don't necessarily always see it. But there just wasn't enough selling. The market was just illiquid. There was some selling, but there wasn't enough. The market was liquid enough on the way down. Even the future side, that the hedging of everything just kind of kept the market stable. Commitment of traders has not shown illiquid sell-off. It just shows a panic move. And the dealers didn't have to accumulate everybody dumping their shares. As a matter of fact, even this last data point on the 7th shows people were buying all last week. So the market on the COT is still showing liquidity, and liquid markets don't crash further. Again, that's another testament to the bottom's in. So I like what I see. Should I buy this dip? MHP. Pancakes or waffles? Dude, waffles all day long. But it depends, though, because sometimes I'm in the mood for a pancake. But waffles are the way to go. Thank you that I got fired so I can make RS. Yeah, I took my severance money and got into trading. And then that was a whole new challenge. And I was so bad at it when I started, I was destined to figure out how to be good at it. I hated being bad at something. My ego couldn't handle that. So I was like dead set on being good at it. That's actually what got me into yoga. And the first time I'm practicing yogi, but I work out all the time. First time I did yoga, it was a funny story because I got dragged into it by this chick I was dating. And I thought it sounded like the stupidest thing in the world. This is before yoga was popular. This is when it was like, it's not like a girl's workout. It's not like ballet, yoga. She's like, no, I got it on Groupon. Let's go. And I was like, fine, whatever. I went. I thought it was going to be such a boring experience. And I went in there as all ladies, all old ladies and stuff. And I was like a CrossFit dude. So I was like jacked and I was in good shape, I thought. I looked good without a shirt on. But, you know, I certainly wasn't healthy because it was like 10 minutes in. I wanted to like I was heaving and about to throw up. I couldn't even catch my breath. And I was so humbled by the fact that I was horrible at something. I was like, well, fuck it. I'm getting the membership until I'm good at this. And I'm going to do this so I can finish the class. And I stuck with it. And I stuck with it for like, it's been like 12 years now. But that's like, yeah, very important question, pancakes or waffles. You guys watch Pirate Software? Oh, dude. I love Thor. This is one of my favorite. I watch every night. I'm such a huge Thor fan. How many people watch Pirate Software? I love it. I watch his clips. I don't watch the whole stream. Yeah. How long have I been married? We're not married yet. And yes, she is really a doctor. Oh, I gotta go to the meeting. Okay, guys. I love y'all. Time to go to the meeting. My bad. I gotta go. All right, stream over. We'll see y'all at the boot camp today, 3:30. Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction. All right, we're gonna fix the data feeds, you guys. I love y'all. Don't forget to come to the boot camp, 3:30 today. 20 days, $20. Sign up. Code Rocket Scooter for all your prop firm needs, guys. But yes, eye doc is really an eye doctor. She's an optometrist. Not married yet, but maybe one day. I started streaming after I was consistent. I started trading in 2010. I started streaming in 2016. 6 years in. Free eye exams. That would be nice. No. All right, guys, I got to hop into the Zoom call. They just yelled at me because I'm not in my own meeting. Oops, fail me. Good job, guys. 10K a day today. I'm excited. I'm happy.